past, Russia can be very good at just putting out a message on tape and footage and comments, pictures of things that are not happening in the moment but are already pre-recorded. They just put them out because it suits a narrative. To me, the real takeaway, however, is that today you see Russians state media suggesting that this idea that there would be amnesty, that there would be no charges into Prigozhin or even Wagner, that a lot of that had been part of a deal brokered by Alexander Lukashenko. Remember, he's the head of Belarus, who the international community doesn't really recognize because they say he rigged the 2020 election, but nonetheless remains an ally, a transactional ally, I would say, to Russia. Again, the terms of that deal that was brokered to defuse the situation now are being called into question. And there's a lot of questions, too, in terms of what is going to happen to Wagner, but also where is Prigozhin? And the idea is that he would be on his way to Belarus, but we've had no indication that he's arrived there.
All right, well, let's bring Leonid into the conversation here. Leonid Bershitsky, thanks for getting on a call with us. Talk to me about what this tells us about Putin's control and specifically his popularity with the Russian people.
Well, his control is not really in question if there's actually a deal with Prigozhin. Such a deal could not have been engineered without Putin's consent, Putin's permission, or Putin's participation somehow in deciding what should happen. His actual power is in question, though, because when, as the mutiny unfolded, nobody really made a serious move to defend Putin and to stop the mutineers. A lot of people professed loyalty, but nobody actually did anything to stop them. So it's a twofold situation in terms of whether Putin is still in control or not. He's still able to engineer deals. The bureaucracy, the government apparatus still obeys him clearly, but nobody will go out of their way to defend him against an armed threat.
Maria, is there any feeling or consensus building after the weekend about what this may mean for the actual war on the ground in Ukraine? Does this strengthen at all the Ukrainian position?
Well, actually, we just heard from the head of NATO, the Secretary General Stoltenberg, who had what is to me a subtle, maybe not even a subtle dig, but just criticism of the operation in Russia, and just seeing the chaos that we saw play out over the past 48 hours. This is exactly what happens when you hire mercenaries, or people that will fight for money to fight your war. And again, he said this pointed to weakness in the way that Russia has conducted this operation, and this idea that the war would be easy to win is obviously by no means the reality now. We've seen it play out for more than a year and a half. Anything that is chaos internally for Russia, the Ukrainians would perceive it as good for them. But again, one of the things that I would stress, however, is that for a lot of the European officials, especially the ones that I was on the phone with yesterday, what they say is that you have to be very clear here. Prigozhin is not an ally to the West. It's not, again, if there had been a coup or Putin had been overthrown, that things in Russia would be better. If anything, you could argue there could be more hardliners that could come in, and the situation could become even more destable. And this is a country that still holds nuclear weapons. I think at this point, does it help the Ukrainians in terms of the symbolic nature of this for them? They say yes, because again, it goes back to this idea that Vladimir Putin is not invincible, that this myth of the KGB man is a myth to some extent, but will it play out on the battlefield, and will they help them logistically? I think that is very, very early to tell. And again, when I spoke to the Ukrainian prime minister last week, he did say to me, look, this is not a Hollywood movie. It's not that things happen and change from one day to another. A counteroffensive counts with many different operations. Will it change something substantially on the battlefield as of today? I think that's overly or an overly stretch. But again, it goes back to this idea, at least for NATO today, of reinforcing this message that whatever happens internally in Russia, for NATO, you have to help Ukraine. That's what Stoltenberg said, and at this point, maintain that support.
Well, Leonid, on that, I wonder to what extent you feel that Putin's authority had already been undermined based on his performance and conduct within the Ukraine invasion.
Well, it's clear that his authority has been undermined by this, by having to actually make a deal with people who stage an open revolt. But whether that affects the events on the battlefield is a different matter. The Russian generals coordinating the Russian resistance to the Ukrainian counteroffensive out of the headquarters in Rostov actually continued as if nothing had happened, even as the Wagner fighters were patrolling the perimeter. So it's not as if some sort of anti-war force threatened to overthrow Putin. Prigozhin is firmly in the pro-war camp, even if he questions the motives that led to the war being started. Like, whatever happens to Putin personally, whether that ends the war is an open question.
Leonid, what do you expect I guess the next thing we will hear from Mr. Putin? What do you expect him to do next?
What do I expect Putin to do? He hasn't really been doing much lately. He's kind of been laying in wait on letting the military do their job. He really has kept out of the action to such a degree that the ultra-nationalist contingent in Russia is questioning whether he's still around, or the Kremlin is being run by a double. So what's he gonna do next? Nothing.
Okay, and Maria, just real quickly, Mr. Prigozhin, what do we know about him, his whereabouts?
Yeah, sorry.
At this point, it's not clear. It's not clear at all. And in fact, this morning on the show, we spoke with Svetlana Tikhanovskaya, who is remember, she challenged Alexander Lukashenko in the 2020 election, which the international community says was rigged, and that Lukashenko rigged in 2020 for himself so that he was a winner. The one thing she said is that, frankly, this should not be a problem for Belarus to deal with, that this is an independent sovereign country in theory, and they should not be dealing with what she said are, quote, thugs. But of course, a lot of the focus will now be on where is he, but also what kind of reception and treatment will he get from Lukashenko. One of the things that I thought was interesting from Tikhanovskaya is that she said he's not really been a mediator. He probably just passed on a message for Vladimir Putin, and he will treat and do with Prigozhin whatever Putin tells him he needs to do next.
All right, Maria, thank you so much for joining us. We know you're busy. Maria Tadeo, European correspondent for Bloomberg News. And Leonid Brzezinski, he's a columnist for Bloomberg Opinion, spent a lot of time in Moscow. He's done a lot of work in Ukraine as well. So really an informed couple of voices there. And Maddie, I guess, we're like the rest of the world, just kind of waiting to see what kind of news or what kind of information will be disclosed about what really happened over the weekend and what it means for Mr. Putin going forward. But again, we had two very, very good voices here, well informed, to give us a little bit of perspective here. But again, a lot more needs to be learned here. We'll have more coming up. This is Bloomberg. All right, let's get some company news right now with Steve Rappaport.
Good morning. Shares of Goldman Sachs opened higher as the firm embarks on another round of job cuts. Goldman announced after the bell on Friday it plans to cut 125 managing directors. Bloomberg's Shonali Basak reports.
These are more senior positions, including in investment banking after a prolonged deal slump. Now, we know that deals are starting to come back, but again, remember how much these banks have hired. This year is almost halfway through, and you're not seeing a jump back enough to justify so many of the jobs that have been brought on in recent years. Over at JP Morgan, that cut number is about 40 people across different levels of seniority. You have another 20 bankers over in Asia also facing job cuts, and then you have Citigroup looking at dozens as well.
Thanks, Shonali. Blackstone struck a deal to sell warehouses and industrial properties to Prologis for $3.1 billion. Prologis' deal will expand its reach in key markets, including Atlanta and parts of California. Elon Musk feels optimistic about the next launch of the SpaceX Starship rocket. The first test flight for Starship in April suffered multiple failures. Musk, in a Twitter Spaces conversation with Bloomberg's Ashley Vance, said SpaceX has made well over 1,000 changes to the rocket since then.
I think the probability of this next flight working is, getting to orbit is much higher than the last one. You know, maybe it's like 60%.
Musk also mentioned his proposed cage match with tech rival Mark Zuckerberg, saying the fight might actually happen. Zuckerberg replied, asking for the location of where they would meet when he proposed the fight. Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Nathan Hager, watching stocks struggle for direction a little bit. Government bonds moving a little bit higher as investors weigh whether central banks are going to push economies into recessions while they continue fighting inflation. We check the markets for you all day long here on Bloomberg, and right now the S&P 500 is higher by 6 points. The Dow has moved just a touch lower now. It is down 17 points. The Nasdaq's holding on to a gain. It's higher by 55 points. 7 of the main 11 industry groups on the S&P 500 are in the green. Energy is the biggest mover to the upside. We're watching crude oil prices move a touch higher right now. They're up 0.25% on the NYMEX, up 17 cents, $69.33. Gets you a barrel of West Texas Intermediate crude. 10-year Treasury is up 2/32 for a yield of 3.72%. The 2-year yield right now, 4.75%. COMEX gold is a bit higher, up 0.2%, up $4.50 at $19.34 even an ounce. The euro is at 1.0909 against the dollar. The British pound 1.2705. The yen is at 143.58. We're keeping an eye on PacWest Bancorp shares. They are higher by 4.7%. The regional bank sold a $3.5 billion asset-backed loan portfolio to Ares Management, looking to boost liquidity following the recent regional bank turmoil. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Madison Mills.
All right, Nathan Hager, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Let's turn our attention to markets here. I don't know, heck of a first half of the year. If you just look at the indexes, the S&P, then NASDAQ 100. I mean, if you happen to own the Magnificent Seven, you're just ripping it here. But how about for the rest of us? And what do we do for the back half of the year? Let's bring in somebody who does his stuff for a living. We like to say David Bahnsen. He's the CIO of the Bahnsen Group, joining us here in our Bloomberg Interactive Broker Studio, which means he's live on YouTube as well, because, you know, we YouTube stream this thing.
Oh, yeah.
On
Cross-platform.
YouTube. You can go to, cross-platform. Thank you. That's a good, multimedia thing. Yeah, you just have to go to YouTube and search Bloomberg Global News, and you'll get that stream. David, thanks so much for joining us here. Again, kind of a market year to date that hasn't, the indexes look good. The numbers kind of look good. But if you didn't own a handful of stocks, you're lagging here. How do you think about the first half and kind of how the market performed? And what do you think about for the second half of the year?
Yeah, there's only two precedents where I've seen it where the cap-weighted index was so good from such a few amount of companies, and that was in 1999 and that period in 2020, and it never, ever, ever ends well. You look at the equal-weighted S&P on the year, it's a totally different story. Now, people can say, I don't care, I don't own the equal-weighted S&P, so if it's 6 companies carrying the index and I own the index, I'm fine. But the problem with that, of course, is it's unsustainable. Markets are mean reverting things. This will revert to the mean. You will need more participation to see a broader market movement.
So what about what you're looking at next? I'm stealing this from Abigail Doolittle from earlier in the show. She was saying that markets are going to be moving more on earnings than Fed moves in the next couple of months. Do you agree?
I think markets always move off of earnings other than sometimes in a couple of months or weeks or days. Ultimately, this is a Ben Graham 101. Markets move by earnings. And I think that you will get better cash flow growth outside of AI and big tech. And that the idea of people anticipating the Fed or trying to game what the Fed will do. The Fed's role in market movements is way too high, and it's only a matter of when, not if, that reverts to more normal weighing of market movement.
Looking at some of your stock picks here, I see some financial services. So let's start off just kind of how you're viewing financial services. I guess that mini little crisis we had in some of the regional banks, that didn't scare you away from the sector?
Well, we only like a couple names, and
Okay.
Truist is the big regional we own, but it wasn't because we weren't afraid of what happened. It's because we didn't think what happened affected Truist.
Now, Truist is the old, remember?
BB&T and SunTrust.
And SunTrust,
They
okay.
merged together, and that's a super regional by any definition of the word. It's only a little smaller than some of those kind of cities and Bank of Americas, and it's a lot bigger than the Silicon Valleys and First Republic. So it's kind of in this no man's land, but it was being treated as a regional. It's interesting. Remember when they put the deposit together to help out First Republic?
Yep.
Truist was one of the banks that did that. They put $1 billion into that. They weren't in need of deposit money. They were giving deposit money. So we think Truist was misunderstood in the market, has great cash flows to get through this tough period.
So I noticed in your stock picks, none of them are super AI related at all. What do you say to clients then who are calling in and saying, why are we not getting in on the AI rally?
So I believe that the way we're invested in AI is the only way people should be invested in it, and that's with companies that actually already have incumbent businesses that make a ton of money. Broadcom, Cisco, and IBM, we own all three. Broadcom's the most AI adjacent, but it's not relying on AI. Like if something were to happen that moves with AI, the whole sentiment changed, NVIDIA could drop 50% in one day. Broadcom is far less reliant on that and yet really does have fundamental exposure. So we like the idea of hedging with cash flow, with a balance sheet, with a real business. And there is an AI component in old line businesses like IBM and Cisco. It's not the most leverage, it's obviously not the most beta, but we think it's a safer way to still be exposed to AI.
So we are coming up on earnings in a couple of weeks. We got the big banks kicking us off here. I'm looking at the S&P 500. The bottom's up numbers like $220 per share EPS. I've heard people, I guess not recently, but they were talking about this thing could be $200, something like that. I mean, do you still see some meaningful earnings risk in this market?
I believe that if you're going to have a severe recession, it's inevitable. In fact, it's sort of a tautology. There is no recession if earnings stay at 220.
Yep.
Like by definition, a recession means corporate profits drop. And at 200, that would be about a reasonable expectation. I think the market priced a lot of that expectation in last year.
Right.
Remember, we were at one point looking forward at, 250 or so. And so I don't think that it is the most likely scenario to happen. I think there's been a lot of earnings resilience. But the problem is the way the market's set up now, it's really dependent on one or two sectors. And you could have earnings in aggregate that hold in there, but the impact sector by sector is very different.
What needs to happen to change that, to change that dynamic of just the narrow rally that we've seen in the S&P?
Yeah, it's inevitable it happened, but it's going to be when the Fed is not our number one story, when everyone isn't just sitting around waiting on the words of a press conference with Jay Powell. That'll ultimately be what changes it. And, I don't think it's good for index investors if we go into the next phase 19 or 20 times forward earnings. You'd rather be at 16 or 17 forward, and even that's not cheap.
Yeah.
But to go into the next phase already above average valuation, I think will be a difficult place to start at. We just prefer to be much more selective, and we run a really concentrated portfolio.
So concentrated portfolio, define what that means for you guys.
We have right now 33 stocks. I've never had less than 25. I've never had more than 35. But that's not by design. If we had 50 companies that met our criteria, we may own 50, but it's always right around 30.
How much cash do you have?
Right now we have about 3%. We don't usually like to run more. Clients pay us to get them risk premia, but we have cash right now just from a sale position that we haven't replaced.
And how many tech names would you say are in there right now?
See, I don't think
roughly?
that the cool kids would consider these tech names, but Cisco, Broadcom, IBM,
those are the
those are
types
tech
that-
names.
okay.
But if it's not a dividend growing, cash flow generative name, which takes out FANG,
Yeah.
it takes out NVIDIA, AI, the big 6-7, even Microsoft, they just quit growing the dividend relative to the valuation they had, so we sold that years ago. So whether it's new tech or even some of those old tech names, Apple and Microsoft both should be two of the biggest dividend growing names in history.
That's what I've been saying. I mean, like Apple, and I say this to all the tech investors, and they push back on me, but I mean, they have a yield less than 1% in dividend yield. You know, they got $1 gajillion worth of cash, so $90 to $100 billion of free cash flow. Yes, I know they buy back stock, but a lot of that's just to cover the options that they're issuing. Why do you think they don't have a 3.5% dividend yield?
Oh, I think it is purely an ego issue in Silicon Valley where they believe, like the reason people push back with you is tech investors believe that they can invest the money better than we can. And they can to a point, but there's a diminishing return.
Yep.
That's why dividend growth is so important for shareholders. At some point, the C-suite starts doing dumb things. Now, Apple makes so much money, they got away with it. My example years ago is they bought Dr. Dre's headphone company for $3 billion. It wasn't worth $800 million soaking wet. Now, for a normal company to throw $2.5 billion in the trash can, that'd be a problem. For Apple, it didn't matter. But that's the kind of bad deals companies do when they're not returning cash.
So give me a name in your portfolio that has a good dividend growth story that you guys own for.
Well, all 33 names in our portfolio are good dividend growing names, but you look at the consumer staples, your Johnson & Johnson's, Procter & Gamble's, Pepsi's, Clorox, they could bore people to death. They've had the best pricing power of any sector through this period of time. Their top line sales have either come down or stayed flat, and yet profits are up anywhere from 7 to 15%. You have a lot of dividend growth embedded in that sector, and then energy, the midstream pipelines are growing dividends double digits, and they're less levered now than they were when they started. So we really like that midstream energy for dividend growth.
Any discretionary names in our final couple of seconds together?
See, this is a funny thing, is I've only owned what I consider one consumer discretionary name my whole career, and it's McDonald's. But I'm not sure. It's really a
staple,
consumer
no?
discretionary.
Right?
I think it's a staple. I think you have to own those. You have to buy those French fries, and it's really a real estate company at the end of the day.
Oh,
Yeah,
interesting.
exactly. And I learned that from watching the movie.
Oh yeah.
I learned. I didn't know that. It made a ton of sense. You're not in the hamburger business. You're in the real estate business.
right.
So,
There you go.
all right, David. Thanks so much for joining us, David Bahnsen. He's the CIO of the Bahnsen Group. I like the strategy of consolidated portfolio and looking at dividends. I mean, that's something you can get your head around.
Yeah.
Where that takes you, I don't know, but it takes you to some of those big staples as well.
Well, and it's just so interesting. You talk about this all the time, Paul. What are we doing with these dividends at these big tech companies?
Yep.
They don't want to do it.
Yeah, they push back. Push back. But my pushback on the Apple is it's not a technology company; it's a consumer products company. That's my pushback.
That's
so we'll see.
interesting. That's a hot
That is
take.
interesting. That's a hot take. S&P absolutely unched on the day. That unched term is for Lisa Bromwich. She hates it, so I always bring it up when I can. Right now, let's head down to Washington, D.C. We'll get world and national news for Amy Marsh.
All right, thank you, Paul. Moscow has lifted counter-terror measures that were put in place during mercenary leader Yevgeny Prigozhin's attempted mutiny. Prigozhin is said to have relocated in Belarus. It's not clear yet, though. Secretary of State Antony Blinken telling ABC's This Week the rebellion showed cracks in Putin's authority.
A direct challenge to Putin's authority, surfacing very publicly the notion that this war, this aggression by Russia, was being pursued under false pretenses, the notion that Ukraine or NATO somehow presented a threat to Russia that it had to deal with militarily. That's now much more out in the open than it's been.
Secretary of State Blinken spoke on ABC's This Week, which you can hear Sundays on Bloomberg Radio. The Supreme Court has lifted its hold on a Louisiana case that could force the state to redraw congressional districts to boost black voting power. This after the court's rejection earlier this month of a congressional redistricting map in Alabama. Lower courts had ruled the maps raised concerns black voting power had been diluted in violation of the Federal Voting Rights Act. The Coast Guard is launching a formal investigation into the deadly implosion of the Titan submersible that killed all 5 on board. Captain Jason Neubauer is leading the probe, which he says is currently in the evidence collection phase. Neubauer added that the MBI investigation is the highest level of U.S. Coast Guard investigations. In 2023, 30% of used cars have a price tag of under $20,000. 5 years ago, 60% of used cars were below that price point. Industry experts say the impact of the chip shortage of 2021 and 22 continues to be felt in the used car market. 18 million new cars were never produced during the period. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 10:40 on Wall Street. I'm Nathan Hager. We are watching stocks struggle for direction this morning. Government bonds are climbing with the focus back on central banks following the weekend events in Russia. The S&P 500's fallen about 2.4% from its last high back on last Friday, June 16th. At the same time, Wall Street's volatility index, the VIX, has dropped as well. Amy Wu Silverman, head of derivative strategy at RBC Capital Markets, says that is highly unusual.
Usually, your VIX goes up when your S&P goes down, and vice versa. We've been having VIX and S&P go up at the same time. One of the reasons for this is because of those bulls, because folks are still reaching for that right tail. They're doing it through options, and that's a function of why you're seeing both volatility and spot price rise in some instances.
At the moment, the VIX is still moving higher. It's up about 5.5% above the 14 handle for the volatility index, while stocks have started to take a leg lower. We check the markets for you all day long here on Bloomberg, and the S&P 500 is now down 7 points, a decline of 0.2%. 4341 is the S&P level. The Dow Jones Industrial Average is down 85 points, or about 0.25% at 33,643. The NASDAQ is little change to lower now, down 4 points at 13,489. The 10-year Treasury is up 4/32, yield 3.71%. The 2-year is at 4.74%. NYMEX crude is little change now at $69.15 a barrel. COMEX gold is higher by 0.3% of $5.50 at $1935.20 an ounce. The euro at 1.0907 against the dollar. The yen 143.58. That's a Bloomberg Business Flash. Bloomberg Markets continues. Paul Sweeney and Madison Mills.
All right, Nathan Hager, thank you so much. We appreciate that. Madison Mills and Paul Sweeney here in our Bloomberg Interactive Brokers studio. You can check out the live stream on YouTube. Just go to YouTube and search Bloomberg Global News. A little bit of a merger Monday here, Maddie. I mean, not a big deal, but it's in tech, so it kind of got my attention. It's IBM. They are buying Apptio for $4.6 billion in an automation push here. But just give you some perspective, IBM's got a market cap of about $120 billion, so not a huge deal. But let's see what it means for our good friends in Armonk, New York, if that's even where they still are located. Anurag Rana, I know where he is. He's in Bloomberg's Chicago office. Happy camper in Chicago. He's a tech analyst for Bloomberg Intelligence. He's been covering IBM and this space for a long time. Anurag, thanks for joining us here. What is IBM buying here?
Yeah, this is a very small company. I think from a logical point of view, IBM made a very big push on hybrid cloud with the acquisition of Red Hat many years ago. This product kind of goes along with it. If you are a company, let's say a Pepsi and Coca-Cola, you have a very old IT architecture, which is all your products or workloads are on premise, and you want to move some of them to the cloud. This product helps you figure out, whether some products are better off you keep it in-house, and whether some workloads are better if you. So it's like a cost optimization product, and in this market where every company wants to save more cost on technology, this is that fits right in with that.
And Anurag, we've talked a lot about the challenges of getting any deals done right now. Why is IBM one of the few tech companies that's been able to get a deal done in this environment?
Yeah, I mean, we have been writing about this for some time, that we think there are only a handful of public companies who can make some deals, and IBM being such a small compared to like the likes of Microsoft or Google or Apple or Facebook. I mean, this is the only one that can make a deal right now, other than private equity firms. I mean, they're really having a ball out there with cheap funding as well as valuations in the software world going down. So IBM is one of the few ones that can do it. And as Paul mentioned, $4.6 billion is not a whole lot of money. The company didn't divulge their financials, but we think the revenue run rate would be somewhere between 400 to 500 million, given that Apptio was public 3 years ago. So if you extrapolate that, so from that point, it's going to be less than 1% of IBM's sales from a contribution point of view. So it's a very small deal, frankly.
So I'm looking at the stock of IBM here, Anurag. I see the stock's down about 7.5% year to date. So it's clearly not getting the AI love that a lot of other tech names have. Why is that? Because they're not an AI play, or how does a company kind of try to position itself there?
Yeah, I'm a bit surprised that they haven't been, they haven't gotten any love where a lot of companies like C3 AI have seen their stock go up, I don't know, 200, 300% or so. IBM actually is one of the first ones to come up with AI products with their Watson suite over the last 10 years. And, it really was difficult to commercialize some of those products because of the difficulty in, implementing those in the enterprise or the corporate world. And I'm surprised that they haven't gotten any lift. Those products are still there. People are going to use them as they come up with their AI strategy. It also has a good consulting arm, which is very required. I think they really need to market themselves a little bit better over the next 12 months with some of the products that they have. And perhaps, people will look at as them as another player in the market.
Do you think within that marketing, they need to have a certain number of AI word counts, basically?
I think they already, kind of used all of that in the last 10 years with Watson, and since nothing came out of it, people don't believe that they can do anything in that area. And I don't really believe that, because they have very good, they work with almost every major company out there. So if you want to try something new, you're going to give it a try with their products as well. I think there is a lot of consumer use that's easy to figure out, and IBM's not a consumer play, frankly, and that's partially the reason why you get more visibility from the likes of Microsoft and what it's doing with Bing or Excel and Google and others, rather than the likes of IBM.
So Anurag, you and Mandeep Singh lead our global technology coverage for Bloomberg Intelligence, and of course one of the biggest issues out there for investors is AI. How are you and the technology team at BI suggesting investors really play this at this stage?
See, I think over the next 12 months, it's going to be a lot of wait and watch things. I think the first applications, as I said, would be more on the search side. We're going to really see what Microsoft does with the, getting some search market share over the next 12 months. That's really, I think, the first area that we have to see. Then you have cloud investments going in. Companies are going to do test environments in, one of the larger cloud providers, whether that's Microsoft, Amazon, or Google, to come up with new applications. So it's going to be a steady progress, but this is one place I think over the and then Mandeep and I have done some work on it. We have published a big report on this topic. We think this is really going to support very strong tech spending over the next decade.
What is that tech spending looking like?
I think, if you go back historically, technology spending has, been somewhere around 5 to 7%, with software being the bigger portion of it, with 10 to 12%. But we think, this thing supports that level of growth, with more spending going towards software and less on the, you could say, services side of it, or some of the other areas.
So, Anurag, give us a sense here of just kind of overall tech spend out there. I feel like it's been obviously such a great secular growth story for decades now. Where are we in that now? I know people are talking about a recession and concerns about that. Where are we in just overall tech spend?
So the near term, we have a problem. We are not seeing that level of spending. We saw some fairly neutral to, I would say, bearish results from Accenture last week, and they are the biggest IT services companies in the world. They are saying their consulting bookings were down, which is the third consecutive quarter. So I would say, as it comes to the second half, or even the results we're going to see in July, we are not very optimistic that we're going to see some massive positive bump coming out because of all the AI rush that we are seeing. Now, having said that, I think they will indicate a lot of new product launches and new things happening. And with that in mind, I think, things could change in the latter half of the year, with bookings improving, and then, 2024 year could be where we see some rebound.
All right, Anurag, thanks so much for joining us. Really appreciate it. Anurag Rana, he's the Senior Technology Analyst for Bloomberg Intelligence, based out in our Chicago office, just giving us some color here on another little M&A trade here in the tech space. IBM buying Apptio for $4.6 billion, pushing more into the automation business, and just kind of getting an overlay of the whole AI story, which seems like, Maddie, is going to have some legs here for a while.
I wonder what stops it, too. Like, at what point is that played out?
Yeah, that's interesting, and I think a lot of folks are saying when you talk to the Anurag Ranas and the Mandeep Singhs and the smart people in technology, that this is a big play. It's maybe kind of a continuation of just the migration of the cloud as more and more applications become digital. So we'll have to see how this plays out. This is Bloomberg. All right, let's get some company news right now with Steve Rappaport.
Paul, if you're just joining us, we'll pick up where you left off. Shares of IBM up less than 0.5% after the company made another big acquisition. More on that from Bloomberg's Jeff Bellinger.
Steve, IBM has been on a bit of a buying spree this year. In the latest deal, Big Blue agreed to buy the software company Apptio from Vista Equity Partners for $4.6 billion. Apptio's website says the company's products are used by a majority of Fortune 100 companies for information technology budget management, forecasting, and analysis. IBM says the deal will accelerate its own automation capabilities. And Steve, if you're keeping track, this is IBM's 7th acquisition so far this year.
Thanks, Jeff. Shares of Pfizer tumble after the company put the brakes on early development of a weight loss drug due to safety concerns. The drug maker made the decision based on data showing elevated levels of enzymes that play a key role in liver function, even though none of the patients reported liver side effects or symptoms. Pfizer is racing to catch up with Eli Lilly and Novo Nordisk in anti-obesity treatments. That market is estimated to grow to more than $100 billion in size in the coming years. And retailers are investigating a recent wave of bomb threats targeting grocery operators and other stores. According to the Wall Street Journal, Kroger, Walmart, Amazon Whole Foods Market, and other companies have received bomb threats at stores in various areas from New Mexico to Wisconsin in recent months. Some callers demand gift cards, Bitcoin, or money and threaten to detonate bombs if those payments aren't made. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
Madison Mills here with Paul Sweeney. We're going to come back with some more news that you need on this Monday morning. But first, we're going to get a check on world and national news with our own Amy Morris. Hey, Amy.
Hi, Madison. Thank you. The Kremlin trying to show its business as usual in Russia following the weekend mutiny by the mercenary Wagner group that had been helping Russian forces in Ukraine. NATO Secretary General Jens Stoltenberg is in Lithuania monitoring military exercises with Germany's defense minister. He says NATO will continue to defend its territory and help Ukrainian forces.
It sends, of course, a message. Our presence here and also the exercise we just watched of NATO readiness and NATO capability to defend every inch of NATO territory. And the reason we do that is, of course, not to provoke a conflict, but it is to prevent the conflict.
NATO Secretary General Jens Stoltenberg says they cannot predict what happens next, but he says it would be a mistake to underestimate the Kremlin. The American Diabetes Association updates its guidelines to strengthen its recommendation of early detection for non-alcoholic fatty liver disease in people with type 2 diabetes. Dr. Nua El-Said is the American Diabetes Association Vice President of Healthcare Improvement and says the new guidelines expand on that topic.
Because non-alcoholic fatty liver disease is very prevalent in type 2. You're talking about 70% of people with type 2 diabetes. Now, the decision was to add more content to the guideline.
Non-alcoholic fatty liver disease can lead to cirrhosis and liver cancer and is associated with an increased risk of cardiovascular disease and death. Only 48% of U.S. adults say they have enough emergency savings to cover at least 3 months' worth of expenses. The Bankrate survey also finds 57% of U.S. adults are uncomfortable with the emergency savings that they do have. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Paul and Madison.
All right, Amy Morris, thank you so much. We appreciate it. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Is Wall Street, are they laying people off? Is this accelerating, Madison?
I know. Well, it looks like Goldman Sachs cutting about 125 managing directors, and these reductions are part of cost savings driving amid those deals that have been slowing down, which we've been talking about. But feels like a big deal to be cutting managing directors, though I guess 125 people, that's not a lot of heads.
No, what's a little bit different here, and you do see it in the later stages of, cost cutting, which is they're going for some of the higher paid folks, the managing directors, some of the more senior people. So you're not only getting the benefit of lower head count, you're also getting, a bigger bang for your buck in terms of compensation savings. So that's kind of how it works. Kind of the first round, 2, 3, 4 tend to be maybe back office people, maybe some junior bankers, junior traders. And then when I find out that's not enough, when business remains challenging from a revenue perspective, then you go for the bigger bucks. But it just feels like, when I talk to bankers, we've had some very successful IPOs. The market's kind of stabilized here. And a lot of bankers I talk to, their backlog, whether it's an equity deal, a bond deal, you see the bond market, anytime there's any stabilization in the bond market, issuers rush to market, even at these higher rates. So it feels like, and then M&A, which is the big one, talking about these huge backlogs.
Yeah.
And you think that, I'm just wondering what really needs to break up the logjam and see the deal flow pick up again.
Yeah.
Is it greater clarity on when the Fed is going to pause, if not lower rates? I guess a lot of issuers and a lot of deal makers are waiting for that to happen.
Yeah, I guess it's harder to get deals done when money is expensive, and we have some data on that. Deal values have fallen more than 40% this year at Goldman to $1.2 trillion, or globally rather, with Goldman the number 2 advisor there, according to data compiled by Bloomberg. So 40% fall off in deal values. Yep. That's a lot.
Yep, and in my day, the first thing to go was the black cars home. That was like, oh, you're killing me. I just worked.
Do they still do that?
Oh, heck yes,
yeah.
Totally.
Okay.
I mean, because you get in there, you 14, 16, 18-hour day, and now I gotta get it home. Can you throw me a car at least? It's 2 a.m. here. So that was that's a rite of passage. You didn't even need a ticket. You just kind of walked out and jumped in a car. When those things go, then it's getting bad, and that's what hits the junior folks the most. We'll have more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, coming up in this half hour, we're going to get the latest on what's happening with the markets. We'll roundtable it with a couple of smart voices. We're going to check in with Herman Chan. He's a senior analyst covering the regional banks for Bloomberg Intelligence. Looks like we're getting some movement here on PacWest, selling a piece of their loan portfolio. What does that mean for some of the other regional banks out there? Big news today. Bloomberg News editor-in-chief emeritus Matt Winkler. He's coming in to discuss his latest column. We always love checking in with Matt, and he's always got some really, really interesting takes as it relates to economics and finance in these markets. Let's kick this whole thing off with Nathan Hager, any Bloomberg Business Watch.
Yeah, we're looking for a struggle for direction here, Paul. Stocks are wavering. An earlier advance in government bonds is moderated as well. The investor focus is turning to central banks. You got the kickoff of the Sintra conference, the European Central Bank getting underway here in Portugal. Whether rate hikes to fight inflation are going to tip economies into recession is the question for this market. Jeffrey Yu is senior market strategist at BNY Mellon.
I think risk appetite unwinding, due to global growth concerns, that was on the way in any case. So we're seeing very good buying of dollar, this carry trade led by commodity currencies, high yielders, and dare I say it, AI stocks and things like that. That seems to be on the cusp of unwinding. These things on the margins cannot advance much further. So we are looking at risk probably softening in the short term. You don't want tail risk to compound that.
And they see a softening in risk appetite right now. We check the markets for you all day long here on Bloomberg. The S&P 500 right now is little change to the upside. 43.49 is the S&P level right now. The Dow is down 38 points, a decline of 0.1%, 33,688. The Nasdaq's holding on to a gain of 13 points, up 0.1%. 13,504. The 10-year Treasury is now up 4/30 seconds for a yield of 3.71%. The 2-year yield 4.74. NYMEX crude is little change to the downside. Actually, it's sort of wavering between gains and losses here. $69.15 for a barrel of West Texas Intermediate right now. COMEX gold is up 0.1%, up $2.57, $19.3370 an ounce. The euro 1.0906 against the dollar. The yen is at 143.53. Looking at 7 of the 11 main industry groups in the S&P 500 in the green right now, led by energy. Biggest decliner is healthcare. The biggest laggard on the S&P right now is Carnival Cruise Lines, down more than 10% after fiscal second quarter earnings that trailed Wall Street's high expectations. We're watching other cruise lines fall in sympathy, including Norwegian and Royal Caribbean. Virgin Galactic is lower by 1.9%, giving back some of its earlier gains after targeting this Thursday for its first commercial space flight. That's a Bloomberg Business Flash. Bloomberg Markets continues. Paul Sweeney and Madison Mills.
All right, Nathan Hager, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in our Bloomberg Interactive Broker studio, streaming live on YouTube. You can go over to YouTube and search Bloomberg Global News, and that'll get you to our streaming of this phenomenal news day and stories that we're bringing your way. Let's talk off with these markets here. The Carnival Cruise Line thing caught me by surprise. I thought that earnings were okay. Stock's off 11%. I don't understand this whole stock market thing here. But I know we got a couple people that do. Madison, we got Katie Greifeld and Jess Metton. They cover all these markets for us. Let's start with you, Katie. What are you looking at here on this Monday?
It seems like if you look at markets broadly, everything is very unchanged. S&P 500, not much movement. You look at the 10-year Treasury yield, not much movement. That's kind of interesting because last week seemed to be a little bit of a dynamic change. Of course, you had both the S&P 500 and the NASDAQ 100 snap some weekly winning streaks that they had been building up. So I guess, I don't know, the question becomes, what is the next catalyst? It feels like we got through some pretty hefty eco data. We got through a pretty hefty Fed meeting. I know we're going to hear from some pretty important central bankers on Wednesday, but maybe Jess Metton has a bigger answer than I do. What is the next driver for this market.
Well, the NASDAQ 100 is actually off to its best first half of a year ever.
Oh,
so
that's a nice
hopefully it
headline.
can
Thank
hold
you.
that stat through Friday, since it's the end, not only for the month quarter, but the first half of this year. So it's rivaling, obviously, the .com. So as long as it can stay above that threshold of more than 34, 35%, it'll hold those gains. We'll see if that continues.
Going
but
back to the .com.
yeah.
That was
Right, that was
almost
massive.
peak Paul Sweeney.
Oh,
Yes. I'm not, February of 2000 was peak Paul Sweeney.
February of 2000.
February of 2000.
Any reason why that you
Tell
can
us,
share?
yeah, tell us
I
more,
signed an
please.
employment agreement that was very good.
Pretty good.
And
Very
it led to
good.
the people joke it led to the firing of the CEO of Credit Suisse First Boston. Because
Well, there you
literally
go.
the month later, the market tanked.
Wow.
Yeah.
I love it.
Yeah.
Well,
March of
I haven't even
2000.
begun to peak. I will say that on the NASDAQ 100, off by 1.3% last week. So we'll see. That was the worst week since March for the tech-heavy index. So I don't know. It feels like everyone piled in. Is the move over?
Yep.
I don't know.
Well, I was looking at, Abigail Doolittle's been, she's brought to that relative strength index look for the S&P. And she's like, oh, yeah, that overbought thing. That makes sense to
Yeah,
me now.
because
And
it
we
was,
were there for a lot of
well,
those.
over a span of 9 weeks, the NASDAQ 100 was only down 2 of those, and one of those weeks it was basically flat. It was only down 0.1%. So last week's declines was coming off of a stellar run there since late March.
But what's driving markets the most this week? I know that volume is down a little bit. Do we feel like the market's just kind of waiting for something big to happen?
Like what the big catalyst could be. So,
Yeah.
I mean, obviously we don't have, I guess, official start for earnings season would be July 14th, because that's when JP Morgan is going to kick things off. So this week, there is going to be a lot of talk from central bankers. Katie was talking about this because we have Jerome Powell overseas. Obviously, Christine Lagarde is going to be at this event, and other central bankers from Japan as well. But it depends on some of the things that they're going to say, because obviously we heard from Powell last week on Capitol Hill, and he talked about reiterating the 2 more rate hikes. But that was already in their dot plots, and we heard that from Jim Bullard actually over a month ago anyway. So that was something that markets had priced in. So in my conversations with my sources, it's less so more on like the macro type of commentary, and it's more like there's been a stellar run here in the first half of the year, so it would make sense that you'd see a bit of a pullback in the broader equity markets after that.
Okay.
Katie.
Yeah.
Anything else I need to look at, like in the bond market? I mean, it just seems like we had, let's go this way. I came in this morning after seeing all the news this weekend, and I thought I was going to see a rip in dollar. I thought I was going to see the stock market trading off, and I thought all this uncertainty can't be good. I got a whole lot of nothing here.
I mean, the credit story for so long has been kind of frustrating because credit spreads have just continued to grind tighter and tighter. I'm pulling it up on my terminal right now. If you look at high yield spreads to treasuries, they're at 430 basis points.
Yep.
Typical wisdom would say that number needs to be about 800 if we get into a recession, which feels a long way away. I think there was a really interesting comment, though, from Michael Collins over at PGIM on surveillance last week. He made the point that if we got back to those sorts of levels right now, that would be a 15% yield on junk, which would be pretty close to Armageddon. So we're probably not going to get there. Maybe if we get to 500, that's an entry point. But I was just kind of interesting, again, thinking about, we love to make 2008 comparisons, but those sort of models don't necessarily sort of copy over neatly into what we're looking at today with this market. And even though we've been talking about this recession forever, maybe you're not going to be able to see the same entry points that you saw back then. But at the same time, it feels like everyone is just pushing back their recession forecast. So who knows if we ever get there. There was a great note from Neil Dutta this morning. I don't know if you guys saw it, but he said you can't say that the recession is coming in 6 months forever. At some point, you're wrong. So we'll see.
Well, Jess, you've got a great story on the terminal about where the stock market is headed after a wild first half. You've got 5 great charts here on this. One of them I'm looking at shows that historically a strong first half of the year bodes really well. Does that mean that the bears are just completely on the wrong side of history here?
Well, obviously, it's never apples to apples comparisons, but if you do look back through, especially since the early 1950s to now, whenever the S&P 500 does gain at minimum of 10% or more, not surprisingly, it leads to more gains for the rest of the year. Clearly, there's still a lot of caveats when it comes to, obviously, the Federal Reserve, their height cycle. Obviously, what Katie was talking about when it comes to those types of recession scenarios. But Gina Martin-Adams over at Bloomberg Intelligence, she has her economic regime model, and she just put out another update to their outlook for BI, and they still feel like a lot of the pain has been mostly toward the past, and a lot of that economic pain was happening more geared toward last year. They don't like to look at GDP because it's more of a backward-looking indicator, but if you're looking at utility capitalization, sentiment, claims, and some other figures that they comprise in that particular index, it is still showing more favorably toward the S&P 500 for the rest of the year.
All right, guys, thanks so much for bringing us up to date on the markets. Katie Greifeld, Jess Menton, they cover the markets for Bloomberg, and we always appreciate them stopping by at this time to break it all down. Equities, fixed income, commodities, they cover it all. Right, now let's turn our attention back to what was very much front burner news 2 or 3 months ago, which is the regional bank situation. It's quieted down, thankfully, suggesting that maybe the worst is behind us in terms of some of the weakness that may have been apparent in the banking system, particularly in some of the regional banks. But our go-to source here is Herman Chen. He's our senior analyst covering the U.S. regional banks and fintech for Bloomberg Intelligence. And Herman, it looked like PacWest, one of the names that we've been talking to you a lot about. That's right. Rises a little bit here. Ares Group, an investor, buying $3.5 billion loan portfolio. What's going on there? Why is this transaction taking place?
Right. So PacWest has had some troubles with retaining their deposits. So one way to sort of alleviate the issue was to sell assets and sell loans. So in the first quarter, they had announced that they're putting some loans on the market. These lender finance loans as part of that package. So now they're executing on this loan, shoring up their balance sheet, increasing capital, increasing liquidity to really help stabilize the bank's balance sheet.
Herman, it feels like so long ago that I would see you at least 7 times a day to talk about the banking crisis. I hope for your sake that has calmed down a little bit. Seems
I've got
like
some
it
more
has.
sleep these days, so that's great.
That is wonderful to hear, much deserved. But this PacWest story, is that a sign of what I've noticed, which is that this is sort of calming down a little bit, that things are okay?
Yeah, it seems like things have calmed down for the industry. We've seen really stabilized deposits. On the other hand, banks are talking about having troubles with profitability as deposit costs increase, but not that existential risk that we saw back in March and April. So now it's going to be more of an earnings story rather than a liquidity story and a liquidity crunch. So things have definitely calmed down, but we're not out of the woods yet. I would say that for PacWest, they're still trading at pretty distressed levels at 0.3, 0.4 times tangible book value. So clearly the market has some concerns, whereas the group that I cover, it's more like 1.0 times tangible book. So there are a couple banks like PacWest that are still feeling that stress.
So if I look at the KRE, the SPDR, the Spider S&P Regional Banking ETF, still down 30% year to date. So that goes to your issue here. Does a market need to see a bottoming in earnings estimates? Does it need to see a turnaround in earnings? What's it need to really?
Definitely bottoming in earnings. There's still a lot of uncertainty involved with where deposit costs go because the whole industry really freaked out in March and April with the declines in the deposits from SVB, Signature, and First Republic, and they're paying up now with Fed funds at 5%. They're starting to match that from some of the CD costs, and so that's really putting a crimp on their profitability and their net interest margin. So how that really shakes out is still up in the air.
Is that going to be the next shoe to drop for these banks, the cost they're having to pay to just keep deposits?
Yes, that's right. So there was a industry conference a couple weeks back, and a lot of the banks really talked down numbers, talking about narrowing net interest margins and higher deposit costs and funding costs in general. So that's still happening, and I don't think there's really good clarity in terms of how that bottoms.
So is it a question of how much of their deposits they offer this higher rate? Because, I mean, I can go into your model and take out the 0% there I was getting paid for my savings and put in 4.5 or 5 or 5.5. I can do that in your model, but I don't know what percentage of the savings I have to pay that on, right?
Correct. So there's two issues. There's the mix issue where you have these zero cost deposits, and those deposits are running down and moving into higher cost deposits, and then the pace of the deposit repricing. So there's two underlying factors that are causing the margin compression.
So I could be a banks analyst. How tough is
There you
that?
go.
Yeah. Oh my God.
Sure.
I mean, Paul Sweeney created Bloomberg Intelligence. Everyone, just as a reminder, we haven't talked about that yet today.
People.
Yes. No, but Herman, is the credit tightening a thing of the past as well? Does it seem like that's going to have a huge impact in the second half of the year?
Yeah, so that's another issue where we're seeing some loan growth really slow. Banks are pulling back on the edges. And you've seen some banks like Citizens talking about exiting their auto lending business. You've seen Fifth Third talking about exiting some purchases of fintech loans that fintechs source. So we're seeing that on the edges where these like non-core loans aren't a priority, and banks are really focusing on the most profitable lending that they can do. Especially now the fact that deposit costs are rising, it's hard to sort of justify some of these like less profitable lending that they were doing in the past.
Yeah.
All right, these folks at Ares Management Company, it's a publicly traded asset management company based in Los Angeles. Smart people.
Right.
Do we know what kind of discount they got on this portfolio?
So that's what's interesting, and I think that's really another reason why PacWest is rallying, because there was a really small haircut involved, and so it sort of goes to show that these banks that are facing some issues can offload their loans without fire sale pricing, which really is good to see for the industry.
I'm surprised. I kind of thought they would get. Do we know what the discount is?
Yeah, it was very nominal.
Oh, really?
So
Okay.
it's something that.
So I would have gone and bid him like 80 cents on the dollar.
Yeah, it was nothing like that.
Okay.
It was in the high 90s, so it was really good.
Okay.
Why do you think that is?
I think it just speaks to the quality of the portfolio, and really the fact that we haven't really seen the credit losses in that lender finance business quite yet.
Yeah.
See, Maddie, this kind of goes to the issue I've been talking to Herman about, which is, I have a little scenario where he's a hedge fund manager, I'm his banks analyst, and I want to know when I can walk into his office and say, boss, now's the time to buy these regional banks. I think they bottomed out. There's some quality ones out there that I can buy on the cheap.
Yeah.
Yeah.
We're not there yet?
I think we're really close. You go in now, there's still some uncertainty, but there's not that existential crisis that we saw. So buying quality names, holding them for a longer time frame, I think it makes sense.
All right. See if I can get that trade on sometime.
Well, that might be why I feel like we're getting more guests who are picking regional banks as some of their stock picks. So it seems like something people are liking.
The gentleman earlier who's picked Truist.
Truist.
But that's not even like a regional bank.
Yeah.
It's kind of a big super regional.
Yeah.
All right, Herman Chan, thank you so much. We appreciate it. Herman Chan, he covers the regional banks for Bloomberg Intelligence, joining us live here in the Bloomberg Interactive Broker Studio. Again, kind of a little bit of a nice trade out there for PacWest Bank, selling some of their loan portfolio for a pretty good price, freeing up some liquidity for that bank. Looking at the markets right here, still not much movement here. The S&P is off only 0.1%. We'll have more coming up. This is Bloomberg. And we'll get company news right now with Steve Rappaport.
Paul, it's not every day that a big business turns to the little guy for help. Axios reports Amazon plans to work with thousands of small businesses, recruiting them to deliver packages by the end of this year. The program, dubbed Amazon Hub Delivery, will target at least 20 dense cities across the country, including New York, Boston, and Los Angeles. According to Axios, Amazon is interested in partnering with a wide range of businesses, such as florists, coffee shops, and bodegas. Ryan Reynolds puts the pedal to the metal with his latest business venture. More on that from Bloomberg's Gina Cervetti.
His Maximum Effort Investments and AC Milan owner Redbird Capital are leading a group of investors spending $218 million to take a 24% stake in Renault's Alpine Racing. That's the unit leading Alpine's Formula One activities. Previously, Reynolds and fellow Hollywood actor partner Rob McElhenney took control of the UK soccer club AFC Wrexham.
Thanks, Gina. The battle of Musk versus Mark could be a real throwdown. Elon Musk says his proposed cage match with Meta CEO Mark Zuckerberg might actually happen. Musk talked about it in a Twitter Spaces conversation with Bloomberg senior reporter Ashley Vance.
Well, I haven't started training yet, so if this does happen, I will train.
Paul, Are you a team Musk or Mark?
I have less than zero interest in this whole thing.
Oh, come on, pick one. Who do you think would do
Oh,
it?
you can't. No.
Well, I think, it hasn't Zuckerberg been, doesn't he work out with some jujitsu or something crazy?
Yeah,
I'm sure he does,
and,
but
and he's quiet. The outspoken ones, you have to, you never know. He might be doing something stealth, and he'll make it the move,
knock each other out.
Last minute, right? Those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. I'm Nathan Hager. We're watching stocks take a little bit of a leg lower and bonds adding to their gains now, with investors weighing whether central banks are going to bring their economies into recessions with their inflation-fighting campaigns. Traders have finally relented on bets that the Federal Reserve is going to cut interest rates this year after Fed Chairman Powell last week warned that the U.S. may need one or two more rate increases before this year is out. We check the markets all day long here on Bloomberg, with the S&P 500 now down 8 points, or 0.2%. The Dow is also down 0.2%, or 58 points. And the NASDAQ is lower by almost 0.4%, 48-point decline. 6 of the 11 main industry groups in the S&P 500 are now in the red. The biggest decliner now, communication services and healthcare. Real estate and energy are the biggest gainers in the S&P right now. The 10-year Treasury is now up 8/30 seconds for a yield of 3.70%. 2-year yield 4.73. That is a 103 basis point inversion between 2s and 10s. NYMEX crude is down 0.1% at $69.06 a barrel. COMEX gold is up 0.4% at $19.38 even an ounce. The euro 1.0913 against the dollar. The yen 143.44. Bitcoin is little change now, trading around 30,300. The market for initial public offerings may be coming back to life after 18 months of quiet. Kava shares are up about 84% since their debut on June 15th. And now this week, 3 more companies are getting ready to tap the public market, setting IPOs up to raise $1.5 billion this month, according to data compiled by Bloomberg. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Madison Mills.
All right, Nathan Hager, thank you so much. We appreciate that. Maddie Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. When I think of Canada, I think of hockey. I think of good beer. I think very nice people, of course.
Of course.
Are very nice. Have always been great to me. Maybe even some smog from forest fires recently, unfortunately. But I don't necessarily think about their economy being that different from ours. But boy, they've had a nice little run here. And we want to get to the bottom of it. So we welcome Matt Winkler. He founded Bloomberg News. That's basically all he's done in his career. That's pretty good, though. If you put that on your resume, like you founded Bloomberg News, you don't need anything else.
That's a pretty big deal.
Anyway, Matthew's kind enough to join us here in our Bloomberg Interactive Broker studio. Matt, thanks for joining us here. Talk to us about Canada, the economy there, and maybe what's driving some of the success they're having.
Always great to be with you. And this is not actually this just in. It really starts in 2015 when Justin Trudeau became Prime Minister of Canada. And one of the things that he said that really jump-started his campaign, because he was actually running third in the polls almost right up until the election, was he said, we need to spend a bit more on our economy, even if that means tolerating budget deficits, albeit at the time exceptionally low interest rates. But the result of that declaration, which by the way was totally taboo, was something that no Canadian politician for more than a decade had dared say we could tolerate deficit spending. And Trudeau sort of crossed that line. And in doing so, he said, by the way, we also want to welcome immigrants. And that really coincided in the very period when in the U.S., you mentioned the U.S., we did exactly the opposite. President Trump did everything he could to shut down immigration in the United States. The result has been a record, unprecedented amount of population growth in Canada. Now 40 million people, up from about 36, 37 million in 2015. And with that has come a diversification of the economy in Canada that also is unprecedented in its 156-year history. What do I mean by that? Well, where finance and fossil fuels were the two sort of dominant industries in Canada, they both shrunk, and technology has more than doubled to more than 10% of the weighting of Canadian industry. And that's a big deal because what it means is that Canada really is embracing the 21st century and what the advantages are of that. And they are that the GDP of Canada is poised to become #1 in the G7 by 2025, according to estimates compiled by Bloomberg. If you look at the stock market, it's today much less volatile than it's ever been. And the result of that is that outperforming the world. If you look at the MCI benchmark, Canada is doing better right now than any other G7 market. So all in all, you put this all together, Canada is surprisingly robust. Its population growth is a big deal because most of the G7 countries are struggling with very, very low growth or no growth at all. And you need to have a dynamic population if you want to have a dynamic economy, and that's where they are.
So talk to us about some of the downsides of life in Canada, because this is a beautifully rosy picture, but not everything is as perfect as it might sound.
So sure, the critics will, with good reason, say many Canadians cannot afford housing right now. I mean, that's true, by the way, in a lot of G7 countries. It's true in the U.S., but nevertheless, it is a reality in Canada. And some of that distress actually comes from immigration itself. So that's a big one. Interest rates are as high as they've been in the 21st century. The Bank of Canada has also been raising interest rates at an unprecedented rate. That, without a doubt, is going to put pressure on the economy, and at some point, if they continue, will hasten a recession. So those are two bad things looming, if you will, in the picture. And of course, not all is bright. But Canada is in a place that a lot of G7 countries would like to be in, and if they could trade places, they happily would.
So Matt, talk to us a little bit more about this immigration policy. What is generally, in broad strokes, the immigration policy of Canada? I know it's probably different because they don't sit physically on a border with Mexico and all of Latin America. So how do they think about immigration?
So actually, Canadians have considered this immigration boom a benefit to their economy. And we know this because a poll earlier this year showed what was surprising to a lot of people, that in Canada, unlike a lot of G7 countries, maybe all of them, immigration is a good subject. Good subject in the sense that people in Canada really believe that having more people increasingly is making the economy stronger. So that's how it's perceived. That has enabled the government to enact measures that have increased immigration, and they've done so because the people are supporting them.
Well, the picture and viewpoint of immigration in the U.S. is obviously very different. Given the economic success, though, that the immigration policies in Canada have caused for that country, is there any lesson there for the American politicians?
We are in the U.S., absolutely. We are in the U.S., a land of immigrants. That's who we are. And our success repeatedly has been borne out by the strength of our immigrants. I mean, we wouldn't have been able to solve the Second World War, if you think about it, without immigrants, just as one example. I mean, biggest event of the 20th century. And there's no question that if it wasn't for Einstein and his colleagues, we wouldn't be in the victor's chair the way we were in 1945. So that's an immigration story, if there ever was one, but there are countless others in American history. So the lesson from Canada would be, it's right under our nose. All we have to do is pay attention.
Hey, Matt, we've got you in our studio. We can't let you go without getting some of the benefit of your experience in the news business as it relates to the news we just all took in this past weekend here. What is your takeaway from maybe some of the Bloomberg reporting and some of just your experience, Matt, about what happened over the weekend, why it's important, and what do you think the future is for Mr. Putin here?
Not particularly bright, based on all of the reporting and commentary that is on the Bloomberg terminal, is my go-to source. And that's because whenever you see a mutiny become something like an insurrection, and then it gets called off at the last minute, and then the head of state, who is Putin, says sort of, oh, well, never mind, let's just get back to work here. All of that is a sign that Putin is much weaker maybe than many of us thought, and also that the people around him are not serving him well. He doesn't know what's going on to the extent that he should. And finally, it shows what a colossal mistake invading Ukraine has been for Russia, and that Ukraine, in fact, is likely to benefit from this turbulence that we saw.
Yeah, just amazing, and presumably this story is still to be written. Probably a lot more that we will learn over the coming days, weeks, and months. Matt Winkler, thanks so much for joining us here. Matt Winkler is the editor-in-chief emeritus of Bloomberg News. He founded Bloomberg News way back when, I'm going to guess, I don't know, 90?
1990.
1990. How about that? I mean, who starts a news organization? I mean, I can see like Hearst, all this stuff in like 1800s, but who starts a news organization in 1990? It takes a village. Very good. Yes. All right, Matt, thank you so much. Appreciate that as always. Just talking about Canada, some good news up there economically for our friends to the north. Always good to see. Right now, let's head down to Washington, D.C. World and National News with Amy Morris.
All right, thank you, Paul. The Supreme Court has lifted its hold on a Louisiana case that could force the state to redraw congressional districts to boost black voting power. Today's order follows the court's rejection of a congressional redistricting map in Alabama, unfreezes the Louisiana case, which had been on hold pending the Alabama decision. Lower courts had ruled the maps raised concerns black voting power had been diluted in violation of the Federal Voting Rights Act. Ukrainian President Volodymyr Zelensky visited troops in Donetsk region in the east part of the country. A statement says Zelensky visited units that had distinguished themselves in fighting near Bakhmut. On the way, Zelensky also visited a gas station in Donetsk region where he met met with some servicemen. This as Moscow lifted counter-terror measures put in place during mercenary leader Yevgeny Prigozhin's attempted mutiny. Prigozhin is said to have relocated in Belarus. That's still not clear, though. He has released a statement. He didn't say where he was. Secretary of State Antony Blinken telling ABC's This Week the rebellion showed cracks in Putin's authority.
A direct challenge to Putin's authority, surfacing very publicly the notion that this war, this aggression by Russia, was being pursued under false pretenses, the notion that Ukraine or NATO somehow presented a threat to Russia that it had to deal with militarily. That's now much more out in the open than it's been.
Secretary of State Blinken spoke on ABC's This Week, which you can hear Sundays on Bloomberg Radio. In 2023, 30% of used cars had a price tag of under $20,000. 5 years ago, 60% of used cars were below that price point. Industry experts say the impact of the chip shortage continues to be felt in the used car market. 18 million new cars were never produced during this period, essentially erased from production. Global news 24 hours a day, powered by more than 2,700 journalists and analysts. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Nathan Hager. Stocks are moving just a little bit lower, and government bonds are moving a little bit higher as investors consider whether central banks can keep fighting inflation with higher rates while avoiding recessions for their economies. Carl Weinberg thinks they can. The chief economist at High Frequency Economics says central bankers' goal may be to get real interest rates to the 2 to 3% range.
Having been at negative real policy rates for 15 years since the financial crisis, our key objective of this is to get positive real interest rates at a level that's slightly deflationary, slightly breaking the economy so that we don't break through full employment, but able to nonetheless support growth at full employment with price stability.
We check the markets all day long here on Bloomberg. The S&P is now little change to lower, down 3 points. The Dow is down 25. The NASDAQ is lower by 32 points. That's a decline of about 0.25%. The 10-year Treasury is up 4/32, yield 3.71%. The 2-year yield is at 4.75. NYMEX crude's moving a bit higher now, up 0.2%, up 13 cents, $69.28 a barrel. COMEX gold is higher by 0.4%, up $70.70, $1937.30 an ounce. The euro 1.0914 against the dollar. British pound 1.2723. The yen is at 143.52. Couple tech stocks of note. IBM is higher by 1%. It's purchasing the software company Aptio for $4.6 billion as it ramps up its push into hybrid cloud and artificial intelligence. And Amazon says it's going to invest another $7.8 billion in Ohio by 2030 to expand data center operations in the Buckeye State. Amazon shares higher by 0.2%. That's a Bloomberg Business Flash. Bloomberg Markets continues. Paul Sweeney and Madison Mills.
All right, Nathan Hager, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Brokers studio. You can catch our streaming video on YouTube. Just go to YouTube and search Bloomberg Global News. Madison's probably won't come as any surprise to you, but I missed this year's trade. I wasn't long, like NVIDIA, Apple, Amazon, all the stocks that have ripped and pushed the indexes higher. So now what do? I feel like I'm behind the 8 ball here. So let me ask a professional here, David Katz, President and Chief Investment Officer for Matrix Asset Advisors. So David, if you've got some folks that feel like, maybe they kind of missed this first half rally here because it was so concentrated, what do you do in the second half?
Well, we're looking for a fairly significant rotation. So now is not the time to chase what worked in the first half. We think the market is going to spread out. Lots of areas that didn't work in the first part of the year are better positioned for the back half of the year. Things like industrials, pharmaceuticals, financials, all should be a better place to be. We continue to like technology, but we don't like all technology. And we do think that the biggest part of the run for those magnificent 7 is behind them. We think they can tread higher or drift higher over the next half a year, but we don't expect any sort of breakneck performance like they just had.
So given that, David, are you more bullish on an equal-weighted S&P 500 index than a classic ETF that would just track the overall S&P?
If we had a bet for the last half of the year, absolutely. We think there's going to be some catch-up. If you look at the S&P 500 weighted cap versus the equally weighted, this is the largest dispersion that you've had between the two, probably in the last 10 or 20 years. Generally, after that, we think that it's going to converge. There's going to be a regression to the mean. So we think the broader market catches up. So choice between the two going forward for the balance of the year, definitely equal weighted.
Hey, David, back in the day, we used to spend time looking at insiders. What are they buying? What are they selling? Is that still a thing?
It absolutely is a thing. And that's one thing that's very interesting about this year. There have been a lot of stocks that have done poorly because they missed one component of the earnings for the last quarter, and the stocks have been taken out and shot. We're seeing the most insider buying that we have seen in a great deal of time, and we think that's a great read into what's going to ultimately happen for the stocks. We would be using that as a buy signal. There's lots of insider buying going on, and we think you want to look at companies that are good long-term businesses, low valuations, and insiders are picking up $500,000, $2 million of stock. It's a great read. We'd be buying those stocks, and we like a lot of those a lot right now.
So what Dan Ives would say is that if you focused on valuations too much, you would have missed the tech rally over the past couple of decades here. What do you think about that?
Well, we think valuation is still important, and especially after you have a melt up, it's very easy to say you don't need to pay attention to valuation. Going into 2023, we were very upbeat about technology because it had gotten battered last year. We thought it would bounce back. We think at this point, valuations will matter because a lot of them are pretty extreme in terms of their stock prices. And we do think after a decade where growth has pummeled value, that value will come back. And last year's a good example. A lot of growth stocks were down 35 to 45% last year. A lot of value stocks were down 5%. So we think over time, value is a good place to be. And we think after you've had a great run in growth, like you've had in those Magnificent Seven, it's going to slow down. Pay attention to the risk.
David, one of your names on your list kind of jumped out at me. Paramount. It's a stock and a company and a management team I've followed for decades here. A lot of people are kind of very cautious around big media here as the industry trends, kind of evolves from what was a pay TV package where everybody paid their, $100 a month to their cable provider, and media companies like Paramount did really, really well. So now it's streaming, and that's a lot of uncertainty there. What's your call behind Paramount?
Well, we think that uncertainty is priced into the stock. We think ultimately people are still looking at whether it's streaming or live stream. They're paying attention and they're watching movies and video. So someone's going to survive. We think that Paramount is a very good business. We think ultimately they have a very good franchise, good product, and people are going to pay for it. We think on their own, the stock should do a lot better. We're thinking that earnings will start to get better and cash flow will start to get better next year. But we think ultimately they should be sold, and they're big players, whether it's a Google or an Apple or an Amazon, that quite possibly could buy Paramount. We do think that Shari Redstone would be inclined to sell if the price were rich enough. And we think from $15 a share, you've got a lot of upside. Shari Redstone is one of those people that was buying stock, and she bought about $2.5 million worth of stock in the last month or two at very attractive prices, right around here. So investors can get the same buys that she made.
And I see PayPal on your list as well. Had a really great start to the year, but not as much anymore. Why do you think now's the time to get in on PayPal?
PayPal is mystifying. They have upped their guidance for the last 2 or 3 quarters. They have beaten revenues. They've upped their earnings guidance significantly. So we think that you're getting a great long-term business at 13 times earnings. The CEO who is going to be leaving did buy a great deal of stock recently, another good insider buying. We think you're getting a good long-term franchise at a very attractive price. Company is buying back a boatload of stock. They're really very focused on enhancing shareholder value. We think you're going to get a new CEO appointment sooner than most people expect. And we think in the meantime, the business is being very well run, great valuation. This stock typically is sold between 25 and 40 times earnings. Now it's at 13 times earnings. That's the opportunity.
And lastly, on your picture, PNC, which is obviously a high-quality regional bank, is this one of those names that maybe was kind of thrown out with the bathwater several months ago, and in fact, maybe getting a good franchise at a reasonable valuation?
That's exactly the case. The entire banking group has sold off very significantly. We think a lot of the problems were company specific. There are a number of good, very large, super regional banks like a PNC, like a U.S. Bancorp, that are doing very well, that are going to weather this difficult environment, and you're getting them at a very low PE, very healthy yield. PNC, also another name that had significant insider buying. Bloomberg recently put out a report that insider buying in the banking group is running, I think it was 5 to 10 times above normal. So insiders seem to like the area right now, and we think they're ultimately going to be right. The important thing in terms of the banks is focus on the biggest and the best. We would not go into the second tier. We would not buy the questionable banks because generally when you have a financial difficult period like you have right now, the weak players can remain weak and really have a lot more risk than the PNCs or the USBs have, or Bank of New York.
All right, David, really appreciate you taking the time there, sharing some of your thoughts, including some of the names you guys are looking at. David Katz, he's president and chief investment officer of Matrix Asset Advisors. And that Paramount one caught my attention there because there are some people that are owning it because they believe Shari Redstone, who's the majority owner, her family, the majority owner of the voting shares, would in fact sell, and that would be a huge catalyst, because then you could argue that there's some real value there, but we'll have to see. It's all in the hands of Sherry Redstone. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Mr. Stephen Rappaport.
Paul, Goldman Sachs opened higher and has since gone the other way after embarking on another round of job cuts. Goldman announced on Friday after the bell that it plans to cut 125 managing directors. Bloomberg's Sonali Basak reports.
These are more senior positions, including in investment banking after a prolonged deal slump. Now, we know that deals are starting to come back, but again, remember how much these banks have hired. This year is almost halfway through, and you're not seeing a jump back enough to justify so many of the jobs that have been brought on in recent years. Over at JP Morgan, that cut number is about 40 people across different levels of seniority. You have another 20 bankers over in Asia also facing job cuts, and then you have Citigroup looking at dozens as well.
Thanks, Shanali. Ford recalled more than 250,000 Explorer SUVs last year over problems with a rear axle mounting bolt, and now federal highway safety regulators are investigating the company after receiving complaints about repairs that were done to fix the issue at the center of the recall. Blackstone has struck a deal to sell warehouses and industrial properties to Prologis for $3.1 billion. Prologis' deal will expand its reach in key markets, including Atlanta and parts of California. The companies both said that in a statement. The properties represent nearly 14 million square feet. And Apple is putting the finishing touches on its Vision Pro mixed reality headset. The company is working on the device software, expanding testing, and finalizing the rollout strategy. Apple has its hands full right about now with other pressing business at hand, readying the next line of iPhones, iPads, Apple Watches, Macs, and more. Those are the company stories we're following this hour. I'm Steve Rappaport.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills and Paul Sweeney here in our Bloomberg Interactive Broker Studio, looking at these markets here. Kind of unchanged on the day. The S&P, no real movement here. Looking down at the yields, no real movement there. We got the 10-year Treasury, 3.71%. A little bit of a lift there to WTI crude oil, up about 0.6%. Still below $70 per barrel, and Bitcoin holding above 30,000 at 30,430. A little bit of support there for Bitcoin. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
Thank you, Paul. Russia's Wagner mercenary chief Yevgeny Prigozhin has issued his first audio statement since his aborted mutiny. He did not reveal his current location and said fighters marched toward Moscow to save the Wagner mercenary group, describing his actions as a protest and not an attempt to overthrow the Russian government. NATO Secretary General Jens Stoltenberg is in Lithuania monitoring military exercises with Germany's defense minister, and he says NATO will continue to defend its territory and help Ukrainian forces.
It sends, of course, a message, our presence here, and also the exercise we just watched, of NATO readiness and NATO capability to defend every inch of NATO territory. And the reason we do that is, of course, not to provoke a conflict, but it is to prevent the conflict.
NATO Secretary General Jens Stoltenberg says they cannot predict what happens next, but says it is a mistake to underestimate the Kremlin. On Capitol Hill, House Speaker Kevin McCarthy says he will not support New York Congressman George Santos for re-election.
No, I am not. We're going to keep that seat with another Republican. Yes, we are.
House Speaker McCarthy tells Fox that Santos should not run. Santos recently pleaded not guilty to federal charges, including allegations of fraud, misusing campaign funds, and lying about his personal finances on House disclosure reports. The Biden administration now handing out more than $42 billion to expand high-speed internet access nationwide, the largest ever campaign to help an estimated 8.5 million families and small businesses finally take advantage of modern-day connectivity. The government plans to parcel out the money to states over the next 2 years. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris, and this is Bloomberg. Paul and Madison.
All right, thank you so much, Amy. I am so excited to talk about this story with Paul.
This is unbelievable, yeah.
I'm certain that you are a huge Taylor Swift fan.
Well, I'm not a huge fan of her music, but I am a huge fan of her and the career that she has carved out. I used to say to my kids, any of my guys, the Stones, Bruce, any of those could sell out the Garden 20 nights in a row.
Yeah.
Can anybody that you guys follow from your area say the same? And they always come back, Taylor Swift.
Taylor Swift?
Sure enough. What a tour she's having.
Well, what a tour she's having, and it could become the first billion-dollar tour. That's according to some reporting from the Wall Street Journal there. It was initially expected to be around $590 million. That was according to Billboard, who crunched the numbers on that. The average U.S. ticket price, are you ready for this? $215.
Yeah.
Which honestly doesn't feel that bad compared to what I know friends have paid for these show tickets. But also just in terms of the economic impact, the average attendee is spending over $1,000 in their overall, spend when it comes to, hotels, travel, drinks, all of these things, the outfits, of course. Yep. So big numbers there.
Are you a Swiftie?
Oh, of course. I had to pick between the Beyonce tour and the Taylor Swift tour, and I had to make the tough choice to go with Beyonce this year.
Well, just because my daughter's in the same demo as you, and she did go to Taylor Swift in New York, could not get Beyonce tickets in New York. So she is going down to Philadelphia and singing in Philadelphia. So you got to be creative, I guess, for some.
She's a good fan then to hit both.
Yeah. I think it was one of my Christmas presents to her was paying for the hotel in Philadelphia.
Nice.
So I think we're just kind of, but it's just amazing. I mean, her tour here for Taylor Swift, 52 dates in the U.S., and then she's doing like 50-some globally.
Yeah.
South America, Asia, Europe. Her popularity is absolutely global. It's amazing.
Yeah. And though, to your point, Elton John is the record holder right now for most successful financial tour.
Yeah, so it's a good way to go out on top. And Billy Joel said it's coming to an end, his residency at Madison Square Garden, where he's got like 100 shows, something crazy. And again, there's a guy who just comes in, as long as people buy the tickets, I'll keep appearing, and they keep coming back. A lot more coming up. This is Bloomberg.
This is Bloomberg Markets
with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe the central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets
with Paul Sweeney
on Bloomberg Radio.
All right, coming up in this hour, we're going to check in on the markets as well. Abigail Doolittle and Bailey Lipschultz are here, so we got two smart voices here. We're also going to check on George Ferguson. He's a senior aerospace analyst. He was on this Paris boondoggle last week where apparently all these airplanes get bought and sold. So he'll tell us who's buying what and how Boeing's doing, how Airbus is doing. And then the highlight for me, Jack Devine, CIA veteran and president and founding partner of the Arkin Group. He's going to join us to talk about Russia, Putin, and the war in Ukraine. This guy is right out of central casting for the CIA. Trust me on this. But first, let's kick this off with Charlie Pellet with a Bloomberg Business Flash.
Hi, thank you very much, Paul. Here's what's going on. We've got the Dow higher, S&P flat on the day. NASDAQ is lower. Stocks are wavering while an earlier advance in government bonds moderated as investors weigh whether central banks can navigate ongoing inflation-fighting campaigns while skirting a recession. So here's where we stand. We do have the S&P down half a point right now, 43.47. The Dow does remain higher for now, up 29 points, up by about 1/10%. And NASDAQ is down 33, a decline there of about 0.2%. The 10-year yield, 3.72%, with the 2-year at 4.75%. Spot gold up $4 the ounce to $19.25, up by about 0.2%. West Texas Intermediate crude 69.68 a barrel, up by 0.7%. Bitcoin 30,400. Bitcoin up today by 0.1%. Well, where to invest in an environment for rising interest rates? David Bahnsen is Chief Investment Officer of the Bahnsen Group, and he was our guest right here on Bloomberg Markets.
I think that you will get better cash flow growth outside of AI and big tech, and that the idea of people anticipating the Fed or trying to game what the Fed will do, the Fed's role in market movements is way too high, and it's only a matter of when, not if, that reverts to more normal weighing of market movement.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Carnival Corp shares are lower after the cruise line operator's fiscal second quarter report trailed Wall Street's high expectations. Its shares had been up 96% this year through Friday's close, but right now, Carnival Corp down 9.3%. Rival Royal Caribbean down 1.5%. Norwegian Cruise Line Holdings down by 3.9%. Again, recapping, we've got a mixed market on this Monday now, with the S&P lower by 3 points, down about 0.1%. NASDAQ down 0.4%. The Dow holding on to an 11-point gain now, up by less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in a Bloomberg Interactive Broker studio. Feels like a calm day out there in the market, just looking at the indexes. But let's bring in some professionals who can walk us through what's happening out there. Abigail Doolittle, she covers the markets for Bloomberg Television. Bailey Lipschultz does the same for Bloomberg News. Abigail, let's start with you. What's kind of getting your attention here today?
I'm not sure it feels like a calm day, but it does feel like a day of not a lot happening. And the reason I say it doesn't necessarily feel calm to me, I almost feel like there's something beneath the surface. But I think where I'd like to start is Tesla, because earlier Tesla had in the pre-market been down by about 2%. Then after the open, it was up about 0.3%. At that point, you had the indexes, the major indexes, higher. Now Tesla is down 3.8%. Now the reason Tesla is down, at least, and I'm going to pull up and see if anything new has come up, Goldman Sachs did get downgraded to a neutral, I believe, from a buy. They're basically saying difficult pricing environment for new vehicles. I would also say, though, the stock's a double on the year, so how much further can it go? But at this point, Tesla has a big weighting on these indexes, so the fact that it's down 3.7% as opposed to being flat is weighing. If this stock continues to sell, and this is a situation actually where the technicals will really come to play, because you could just have some of the, so Tesla is right now putting in a lower low relative. Tesla is at its lowest level. It's broken. it's breaking down technically. I guess I'll just
well,
say.
I'm just
so
looking
we
at
could see
the
more weakness.
I'm just looking at the RSI function again, and I see
let's pull that up.
the 200-day and the 50-day moving average coming kind of crossing here, and that's called something bad, I think.
Well, sometimes it's good and sometimes it's bad. Here I would say it's neutral. But to your point, the RSI, that's super interesting because at the height it had been above 90. Now it's at 59, quickly going down. I think that you're going to start to see Tesla go down. Simply AI, air coming out of the bubble, the valuation coming out of the bubble, but that this Goldman downgrade gives people an actual impetus to basically take profits off the table on a huge winner on the year.
Well, some of these other tech names are struggling so far today, Bailey. When you look at a Google or a Meta, is this just the market feeling like it's a little overbought at this point?
Yeah, no, I think as Abigail mentioned, some profit taking. We also saw Alphabet get downgraded over at UBS, but when you look at the biggest laggards and biggest weights on the S&P 500 using that MOV function, NVIDIA, Microsoft, Tesla, Meta, Google, all weighing. So you're really seeing a driver for some of these stocks, but broadly speaking, it does seem like investors, at least in these big tech companies, wanting to take a bit of those profits. Again, we did talk earlier about Carnival Cruise, which had been basically doubled this year. You're seeing right now investors, it seems like, taking advantage of the relative calm. And also one thing you have to keep in mind is the volumes are overall pretty light right now, 10% lower than what's been normal on the S&P 500 over the last 100 days, 20% delta on the Dow Jones. So not sleepy, but does kind of have a summary vibe, even though we have a lot of news that had been coming out on individual names and what was kind of a big merger Monday, in my view.
All right, you want to talk about a summer vibe? I get on my choo-choo train in Spring Lake, New Jersey at 5:30 this morning. Only person on my whole car.
I believe that only because
It's like, what?
I was not on as early of a train, and it was not out of New Jersey. It was out of Westchester, but I wasn't the only person on, but it was empty. And I was thinking to myself, is this because of the July 4th? A lot of people are stringing together into next.
I think it's just Monday in this new world order.
I think it is too, although it felt a little bit quiet because sometimes the Mondays and the Fridays, I think people are starting to spread it out a little bit. But yeah, there was a summer vibe. I agree with you.
And are we going to see that in the trade, Abigail? Do you feel like there's going to be a lot of vacation taking?
You know, it's interesting because we are definitely seeing a lighter volume. We've had lighter volume for a while, so I guess that would be one signal of it. Yeah, so I would say right now we're seeing that lighter volume, maybe signaling some of the summertime trading.
Hey, Bailey, is there any sense out there from the street or maybe some of your reporting about, is there any reason to think that those Magnificent Seven stocks and the concentration in the marketplace, while that's any reason why that would not continue?
No, I mean, the one thing that has been coming up a lot more in conversations has been the idea that the others will catch up. So a lot of investors I've been talking to are pitching kind of the catch-up trade where you're looking at maybe the equal-weighted S&P catching up to that. I don't think investors are ready to throw in the towel or give up on that Magnificent Seven, but it does certainly seem like, especially again, when you take into account that Tesla was downgraded again, you do have a lot of the fundamental arguments around some of these big tech stocks is that maybe they're overvalued, but as we've learned, it's impossible to really bet against those big companies, especially if you view AI as being kind of a next frontier that can actually give further growth for a lot of these stocks.
Bailey, I know that your beat of ECM is so exciting to you. You love it so much. I've never seen someone more passionate about a beat in my entire career. Anything we need to watch in that space this week?
No, yeah, we have a couple IPOs that are going to price this week. So we had Kava earlier in the month that basically doubled on its debut. We have three IPOs, or three of the bigger IPOs that are coming up. And I know we've talked about those in the past. You look at expectations for on Wednesday pricing, Thursday debut, Kodiak Gas Services, Savers Value Village, which is a thrift company, and Fidelis Insurance, a reinsurer. So three companies all pricing in more than all raising more than $300 million. So it seems like we'll get another real look at whether these IPO green shoots will have legs later this week.
I'd be pitching it. If I were back in my banking days, I'd be saying hit the market now. I mean, I think raise it. Yeah, I think the market's more open than a lot of people think, but that's just me. Maybe I'm just being the optimistic banker. So anyway.
No, I was just going to say one of the things I did talk to an ECM banker. What he was saying is day to day, they don't think we're in a bull market with low volatility. They said like fundamentally, if it's below 15, good. S&P at a 14-month high, positive, but it doesn't feel that way.
That's what I hear. That's what I hear. All right, Bailey Lipschutz, thanks so much for joining us, as well as Abigail Doolittle giving us a breakdown on this market, finding some stories underneath the index level. Let's check in with George Ferguson right now. He's a senior aerospace and airline analyst at Bloomberg Intelligence. And Bailey, for years, I funded his little boondoggles over to London and Paris. And he was always telling me, oh, it's really important. I got to go see, these air shows and see what planes are being bought and sold. So thankfully, I don't have to fund him anymore, but he's still going. Good for him. So, George, I know you're over there in Paris. Lots of big deals get done here. Airlines are buying aircraft from the manufacturers. What's the tone here, or what was the tone in Paris?
So I think the tone was, there was more orders in Farnborough last year. The shows in Farnborough, England last year. More orders, so that's a positive. But I would say that a lot of the orders, the majority of them went to Indian carriers, so it wasn't a very diversified book. It really feels like that because the backlogs are so large, and Boeing and Airbus's backlogs for like the 737 and A320, the most important people movers globally, they stretch into the next decade already. And so I think the feeling for me was that if you needed an airplane, you weren't going to wait for the air show to get that order in the books. But I think some of the Indian airlines made a bit of a splash and made the show look decent. And a huge amount of discussion about supply chains. Supply chains are still very much a problem in aerospace. It's going to limit our ability in the industry to build airplanes and push that backlog out further. Again, one of the reasons why if you need a new airplane, you better get your order in quickly.
George, why have we seen some alleviation of supply chain issues across other industries other than aerospace? What's up with that?
I wouldn't say that we haven't seen any alleviation. I think it's gotten a bit better. But the challenge is, for aerospace is a really high-end manufacturing business. And so even as you backfill people, you also need to train them to get to the right level of safety and the right level. Then you need a level of efficiency after that. And so it means that there's a lag even after you hire them to getting them as productive as they can be. But even at that, I think what we've seen in aerospace is a lot of folks left this industry during the pandemic because they saw worldwide, global airline traffic fall through the floor, and they said, I'm going to go find myself something else to do. And many of them haven't come back, right? They're concerned probably about the volatility. They found a better job. Maybe they found a job that could work from home. Another incentive we don't have that doesn't work very well in aerospace, right? Because you have to go to a factory floor to make the airplane. Just like the TSA agents have to go to the airport to actually check bags. So that flexibility, lifestyle flexibility, isn't in the industry as well. So I think those are some of the reasons why aerospace is lagging the rest of the global industrials, I think, from getting people back into the firms and building those backlogs, improving productivity.
Hey, George, I know you also cover all the defense primes as well. What's the war mean for these guys in Ukraine, broadly defined?
Yeah, right now I'd say the global threat level is higher, and I think it's making countries spend more money and think about where they're spending their money, which is a positive. It's unfortunate we live in that kind of world, but that's the way the world is. I think companies like Lockheed you've already
All right,
seen.
hey, George, we're going to have to just interrupt you here, George, because we're going to go down to Washington. We're going to go to President Biden, who's currently talking about the situation in Russia and Ukraine.
To monitor closely and report to me hour by hour. I instructed them to prepare for a range of scenarios. I also convened our key allies on a Zoom call to make sure we're all on the same page. It's critical that we're coordinated in our response and coordinated in what we to anticipate. They agreed with me that we had to make sure we gave Putin no excuse. Let me emphasize, we gave Putin no excuse to blame this on the West or to blame this on NATO. We made clear that we were not involved. We had nothing to do with it. This was part of a struggle within the Russian system. I also talked at length with President Zelensky of Ukraine. I'll be keeping in contact with him. I may be peeking him later today, early tomorrow morning, to make sure we continue to remain on the same page. I told him that no matter what happened in Russia, let me say it again, no matter what happened in Russia, we, the United States, would continue to support Ukraine's defense and its sovereignty and its territorial integrity. He and I agreed to follow up and stay in constant contact. I'm also in constant contact with our allies to maintain our coordination. I'll be speaking with the head of state right after this meeting today and making sure we're on the same page. I didn't get a chance to speak with one head of state yesterday. We're going to keep assessing the fallout of this weekend's events and the implications for Russia and Ukraine. But it's still too early to reach a definitive conclusion about where this is going. The ultimate outcome of all this remains to be seen. But no matter what comes next, I will keep making sure that our allies and our partners are closely aligned in how we are reading and responding to the situation. It's important we stay completely coordinated. And now I'd like to turn to today's announcement, begin by asking a question.
All right, that was President Biden just giving some comments here on the events over the weekend in Russia, talking about his continued support of the U.S. of Ukrainians in their fight against Russia. Let's get back to George Ferguson on a very, a topic that's close to kind of his area of coverage, which is the defense companies, the aerospace companies. And George, we're talking about, kind of it just seems like there's so much materiel and personnel, but materiel being used up in Ukraine. Are there any companies, defense contractors that you've been talking to clients about that maybe might be a way to play it, if you will, from an investment perspective?
Yeah, I mean, I think that you're going to see higher spend through all of the U.S. defense primes. And I think the spend isn't sort of focused on Ukraine, right? Ukraine's spending a bunch of money. It's relatively small though, compared to the larger U.S. defense budget and even the combined European budgets. And so I think where you see a lot more money spent is as countries up to their level of readiness. And I was saying right before it broke, I think you've seen Lockheed Martin, right, since the war in Ukraine broke out, they sold a bunch more of the F-35s throughout Europe. I think allies care about interoperability with the U.S., so that it helps to sell some of that equipment. The great news is that U.S. equipment generally is more field tested, combat tested, if you will. And so that means as European allies, Asian allies, Middle Eastern allies think about upgrading their capabilities, they want to have operability with the U.S. and they want to have equipment that works very well. And so I think Lockheed and the F-35, the F-16, you'll see radars and missiles out of Raytheon. It'll spread the gamut of the U.S. primes and its readiness focused.
All right, George, thanks so much for joining us. Really appreciate you taking some time to speak with us today. We were interrupted a little bit by the president there, but George Ferguson, he covers all the aerospace, defense, and airline companies. Great to check in with him. This is Bloomberg.
Now, your
All right, let's get some company news right now with Steve Rappaport.
Paul, IBM makes another big acquisition. Details from Bloomberg's Jeff Bellinger.
Steve, IBM has been on a bit of a buying spree this year. In the latest deal, Big Blue agreed to buy the software company Apptio from Vista Equity Partners for $4.6 billion. Apptio's website says the company's products are used by a majority of Fortune 100 companies for information technology budget management, forecasting, and analysis. IBM says the deal will accelerate its own automation capabilities. And Steve, if you're keeping track, this is IBM's 7th acquisition so far this year.
Thanks, Jeff. Shares of IBM are up less than 1%. Pfizer stock takes a hit after the company put the brakes on early development of a weight loss drug due to safety concerns. The drug maker made the decision based on data showing elevated levels of enzymes that play a key role in liver function, even though none of the patients reported liver side effects or symptoms. Pfizer is racing to catch up with Eli Lilly and Novo Nordisk in anti-obesity treatments. That market's said to grow by up to $100 billion in the coming years. And law enforcement officials are investigating a recent wave of bomb threats targeting grocery stores, operators, and other retailers. According to the Wall Street Journal, Kroger, Walmart, Amazon's Whole Foods, and other companies received bomb threats at stores in various areas from New Mexico to Wisconsin in recent months. Some callers demanded gift cards, Bitcoin, or money and threatened to detonate bombs if the payments weren't made. And those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long at Bloomberg. U.S. stocks continue to trade lower, with the S&P 500 index down now by just about 0.3%. Stocks are faltering as investors mull economic threats. We've got the Dow up 27, up by about 0.1%. NASDAQ Composite Index down 95 points, a drop there of 0.7%. NASDAQ 100 Index down 0.8%. An up day for the Russell 2000. Small cap shares are higher. Right now, the Russell 2000 up by about 0.4%. 10-year yield 3.72%, with a 2-year that's yielding 4.75%. Gold higher, little changed, up $4.20 the ounce to $19.25, up by about 0.2%. And West Texas Intermediate crude up now by just about 0.7%, $68.62 a barrel. Tesla shares are lower after the automaker was downgraded to neutral from buy at Goldman Sachs, which flagged the substantial surge in the stock, as well as difficult pricing for new vehicles. Right now, we do have Tesla shares trading lower by 4.9%. Among other EV makers, shares of Rivian Automotive down now by about 0.5%. Again, recapping, we have got the Dow higher, S&P, NASDAQ, they are both lower. S&P down by 5, a drop there of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate Madison Mills, Paul Sweeney here in the Bloomberg Interactive Brokers studio. And what a treat it is to welcome our next guest, Jack Devine. He's the president and founding partner of Arkin Group. But we love talking to Jack because he is a 32-year veteran of the Central Intelligence Agency. Folks that know call it CIA, not the CIA. It's just CIA. And folks, his resume is way too long to go over, but he was in Europe, he was in Latin America, he was pretty much everywhere, and probably places we don't know about and we're not supposed to know about. But he's going to give some good perspective here on what's happening in the world. Jack, it was a crazy weekend this weekend. Can you give us your thoughts here as we try to process what happened in Russia?
Well, it's a big question, Paul. Yeah. I was planning on doing a lot of things this weekend, but
Right.
away, I couldn't pull myself away. You know, back in March of 2022, I put an op-ed in the Wall Street Journal saying that Putin's invasion of Ukraine ensured his demise.
Okay.
I didn't say next week.
Right.
Yeah.
This isn't quite what I had in mind, but you could see this building, that something had to give between the Wagner Group, the military, and Putin. It just couldn't go on the way it was. Was I expecting that they were going to march up the highway to Moscow and that they'd have get as far as they could? A bit of a surprise. I think this is really important. It has damaged Putin significantly. It's changed the world's perception of him and internally. But this isn't what I had in mind, and that he won't endure. I think it's a bit longer coming. I think that Prigozhin moving back was part of their strategy to just get him to stop and head back, and I think it was a good move, however they sold it. And so I think Prigozhin's days are gone. Now, Putin has the job of trying to patch it up, and this is where I think the troubles begin. I was actually expecting it to begin after the second offensive, but right now I think he's got his hands full regaining the control he needs.
What do you think is going on in Ukraine right now? And do you think that Ukrainian officials are feeling like this is going to be a moment for them to finally come out on top?
Well, I think they broke out the champagne.
Yeah.
Maybe they shouldn't use it all, save it for later. But I think it's a very positive development because I think it weakens Putin's arguments, both internally and externally, about why he's there. I think the battlefield will continue looking the way it has recently. Everyone was expecting the big counteroffensive. I kept saying, it's David and Goliath. If he's just holding Goliath off, this is really good. So I think expecting too much from the counteroffensive was not realistic. I think they will make progress. They will continue. This helps them because I think the forces on the ground are going to be demoralized and trying to sort out where they are and why they're shooting, why are they being shot at. So, but it's a tough haul. So I think the bigger picture is the long game, and the Ukrainians should be upbeat about that part of it.
So, Jack, if there is going to be some challenge to Putin and his authority within Russia, and maybe the events over the weekend will serve as a catalyst to maybe accelerate that, where do you think it will actually come from? Will it come from the military? Will it come from other political factions? What are your sources kind of telling you?
Well, first of all, I didn't think you would see a coup. In other words, the Army, Navy, Air Force yanking him out. I didn't think he'd lose in an election. I didn't think the mass demonstrations in the streets would push him out. I think when he becomes a liability to the elites and the establishment. Now, we could spend a lot of time defining that, and it's an amorphous group. It's elements within the intelligence services, within the security apparatus, within the military, but and the money people. So I think he's more of a liability today, but he's not enough of a liability for them to act. This is bad news, what they're looking at. If you're in the military and you're looking at your armed forces, you're having a bad day and you want this to end. I think there's more sentiment about trying to figure out how to get out of Ukraine. That doesn't mean a deal. I don't see a deal in the cards. So I think if anything happens, and I thought this in March of 2022, it'll be when he fails in the offensive and the Ukrainians sort of stabilize where they are and it becomes a liability. And at that point, a conspiracy develops, and it's not, as I said, it might be something like a palace coup, and we will be surprised some morning we wake up that suddenly he's walked to the door or carried to the door. That's what I anticipated, but it's not an imminent, in my view, not imminent.
I guess I wonder then, it feels like in some ways he's already hit that definition of a liability. What changes that dynamic then? What is the thing that he has to mess up, the single biggest thing?
So I think Prigozhin is now out of the game. That doesn't mean he can't cause a major problem tomorrow morning, but his ability to remove Putin, I don't think that was his original objective, or maybe never. But I think the real challenge now is Putin is given a bit of a breather and a chance to crack down, solidify his position. So I believe the old KGB and the are running around doing everything he can to figure out, test everybody. But this is a delicate thing. He doesn't have an iron hand anymore. He may be holding a clay hand, and that's what we're going to find out. How adept is he at doing this? Because if you start doing it, you may then trigger elements within that elite that I talked about to decide to take action. So I think he's got a very tricky hand to play. I used to say he was very good tactically, but not very good strategically. I'm not sure he's good at either anymore, just like we're not so sure if the Russian military's how good it is. So I'm not optimistic that he's going to be able to handle it over the long run. But I wouldn't count him out of the game now. Despite what I'm saying, I think he's ensured his demise, but it isn't. I don't see it as being an eminent issue.
President Xi Jinping of China, I guess tacitly has been supporting Russia. Mr. Xi's probably going to be saying, "Oh my, who did I get into bed with? I mean, who's this guy? I mean, he can't even take care of his own country." How do you think China's viewing all this?
I think they see Putin as a liability, but not enough of a liability. In other words, there can be a liability as a question of where is that pressure point, and that burns slower. But the embrace, it's very important that China and Russia, from China's point of view, remain together, because together they represent a counterblock to the democratic nations, right? So even though Russia is a weaker partner, it's an important alliance. So they wanted to stay, but they haven't embraced it. It's not a bear hug. I mean, there's some deep issues between Russians and Chinese historically. But I won't go back into my days on the effort in Afghanistan.
Yes, exactly. Jack, I mean, one of the things I'm also thinking about is, Maddie and I were talking about it, I mean, Putin, he's totally irrelevant to the world's leaders, right? He has no standing with a Biden, a Xi, the European Union. I mean, he doesn't get invited to the G7s or G20s or any of those types of things, does he?
He can't come back.
Can't come back.
There's no road back. That's what I was saying before. There's no way.
So if I'm Russia, I can't have that, can I?
And that's at the point where, at what point does that become intolerable for what mix of people? And do they have and how hard can he be? So I think we just have to wait and see how that plays out. It's interesting that Erdogan called him among the first. Now, remember, they tried to oust Erdogan.
Right.
So if I were guessing, this is Jack's guess, that he gave him a couple tips that when they try and push you out, these are a couple of things you do. And one of them is get any deal going so they back off, and then you get a breather. Right. And then make sure you count noses.
Wow, interesting. All right, Jack, thanks so much for joining us. Really appreciate you coming here. Jack Devine, he's a president and founding partner of the Arkin Group, joining us live in the Bloomberg Interactive Broker Studio. No phoning it in for Jack Devine. Jack, great experience, great perspective. 32 years, a veteran of the Central Intelligence Agency, again, serving all over the world, including heading the CIA's Afghan task force back in the 80s, which is in and of itself worth, I think, dinner and some drinks to get some stories there. So we'll set that up. Exactly. Oh, yeah, absolutely. The book. I did read it. Oh, not going to have enough time. Oh, yes, I got plenty of time. The book is Good Hunting, an American Spy Master Story. I read it. It's great. I recommend it.
And my second book is Spy Master's Prison.
There you go. Keep it coming. Let's head down to Washington, D.C. right now. We'll get world and national news with Amy Mars.
Actually, it's Nancy Lyons. But thank you, Paul. Russia's That's okay. Russia's Defense Minister Sergei Shoigu is trying to show a united front with President Vladimir Putin and Russian troops today following a mutiny over the weekend by the head of the mercenary Wagner Group, Yevgeny Prigozhin. Shoigu was shown on state television today meeting with officers at the Forward Command Post in the war zone with Ukraine. Well, the former U.S. commanding general in Europe, General Ben Hodges, tells Bloomberg what happened over the weekend will likely benefit Ukraine.
This is not the kind of thing that occurs in an army that is confident that it is winning or that it's on a path to victory. So this reveals not only the fractures in the Kremlin and the leadership structure, but I think it also is adding enormous pressure on what already exists in terms of rivalry and hatred between different military factions.
General Ben Hodges says he's still skeptical the agreement reached to end the mutiny will be honored. President Biden today says the U.S. was not involved in the mutiny in any way. The American Diabetes Association is updating its guidelines to strengthen its recommendation of early detection of non-alcoholic fatty liver disease in people with type 2 diabetes. Dr. Noa El Sayed is with the American Diabetes Association.
Because of the gravity of this condition and how prevalent it is in people with diabetes, we've decided to give it special attention.
Dr. Al Sayed says non-alcoholic fatty liver disease can lead to cirrhosis and liver cancer and is associated with an increased risk of cardiovascular disease and death. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow higher. The S&P, NASDAQ, they are both lower. NASDAQ 100 index down now by 1%, but the Russell 2000 up today by 0.1%. Stocks are wavering. An earlier advance in government bonds moderated as investors weighed whether central banks could navigate ongoing inflation-fighting campaigns while skirting a recession. S&P lower now by 11 points, down by about 0.3%. We do have the Dow Industrials up 18, a gain there of less than 0.1%. NASDAQ, as I mentioned, down 117 points, a drop there of 0.9%. 10-year yield 3.72%, with the 2-year 4.74%. Spot gold up $3 the ounce to $19.24, up by about 0.2%. West Texas Intermediate crude up 0.8%, 69.73 a barrel on West Texas Intermediate crude. IBM is buying software company Aptio for $4.6 billion, marking the 7th acquisition this year as CEO Arvind Krishna pushes the company's transformation into a hybrid cloud and AI business. Anurag Rana is a senior tech analyst with Bloomberg Intelligence, and he was our guest right here on Bloomberg Markets.
If you are a company, let's say a Pepsi and Coca-Cola, you have a very old IT architecture, which is all your products or workloads are on-premise, and you want to move some of them to the cloud. This product helps you figure out, whether some products are better off you keep it in-house and whether some workloads are better if you... So it's like a cost optimization product.
You can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. IBM shares up now by 1%. Anthony Fauci, former head of the U.S. COVID response, is joining the faculty at Georgetown. The Washington Post says he'll be teaching medicine and public policy. And Harry Markowitz, a Nobel Prize-winning economist who redefined money management by showing that diversification could reduce investment risk while maximizing returns, has died. Harry Markowitz was 95. Recapping, stocks mixed. S&P down 13, down 0.3%. 2-year yield 4.74%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pelleton, thank you so much. We appreciate that. Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. Let's talk venture capital investing. I wonder how that market is reacting to a market where you've got rising interest rates. We've got potentially a recession on the horizon. What's that mean for the folks in the VC biz? Zoe Pedden joins us. She's a VC partner at Ananda Impact Ventures. Zoe, thanks so much for joining us here via Zoom. Talk to us about what you guys do at Ananda. What is your angle on venture capital investing?
Thanks, Paul. Yes, so Ananda is an impact-focused venture capital fund based in Europe. We invest in sustainable solutions to the world's most pressing ecological and social challenges across biodiversity, climate, health, education, and employment. So 200 million euros across 4 impact funds. And we've got an active portfolio of 33 investments.
So talk to us about how your portfolio and your work day-to-day has changed given the higher interest rates that we're experiencing that Paul mentioned earlier. How is a higher interest rate environment impacting you?
So in terms of a higher interest rate environment, the companies, the advice that you see in media and reading in the papers is quite conflicting sometimes. Many of the companies before the interest rates were really growing really fast. And I think a lot of the advice that we're giving them now is to look at the areas where they're growing fast, if they're working in different industries, to focus on those ones rather than new ones that might be a few years away yet, and then cutting back. If there's anything that they can trim, they will trim. And if they can put up those prices too, if that market is elastic enough to be able to do that, then now's the time to put those prices up. But they're strong, they're fierce, they've faced other things before, they're all used to working in difficult environments. So yes. It's an interesting time for sure.
Hey, Zoe, give us an example of maybe a recent investment you guys made. You know, what attracted you to that investment? What are some of the analysis you did, and why did you actually end up investing?
Okay, yes. So this is quite related to, the challenges of how much you ask a company to cut back, because one of the recent investments we did is a company called Nature Metrics. And this is the world's leading environmental DNA company. And what I mean by that is they're measuring biodiversity to be able to help enterprises, very large enterprises, become nature positive. So we're talking about all the regulated industries such as extractive, marine, water, utilities, as well as non-regulated industries looking at nature. And a lot of climate finance is starting to look at nature and start to build bonds and loans around these metrics to be able to offer large industries, banks, special loans based on these metrics. So for us to start saying to this company, I think it's time that you need to be watching your finances. This is such a cutting edge area that's in such high demand. So for us, the analysis around it, it's, nature is the new carbon. So you've got carbon credits, I believe biodiversity credits are the next thing coming up.
So talk to me about how you measure the impact of these companies over time. We talk a lot about, the obsession and interest in ESG investing and impact-driven investing, but how do you specifically measure the success of those initiatives?
Well, there's something to really be conscious of here. It's around terminology. There's a lot of confusion in the market around impact and ESG. And I think a great resource that your listeners might be interested in is by Tideline at tideline.com, a New York agency, which outlines a real simple difference between ESG and impact. So first of all, it's important to get the terminology correct. And impact is around intention, is outcomes focused, whereas ESG is more around inputs and is more risk management focused. So the way we go about it is we will look at a company and start to ask the founders what their intentions are for their end goal. So look at their theory of change. And this is very outcomes focused. What do they want to change in the world? And then looking over, this could be 10-year horizon, but looking at what is going to happen over the next 2 to 3 years. What are those outputs? So maybe 2 to 3 KPIs that we can measure. So with Nature Metrics, it might be around the kilometre, the hectare spread of the area that they're able to measure on the planet with environmental DNA when they're collecting that. And it also might be around the number of red-listed IUCN endangered species that are able to collect too. So we're able to demonstrate the growth and the efficacy. So they're business drivers as well as impact drivers. And we have 2 to 3 of those in some of the earlier stage ones and a few more when they get later stage. And is it possible for me to mention about our impact carry in the term sheet that we have? Because I think that's quite exciting, actually. So something that really demonstrates, what an impact investor is from maybe someone who calls themselves ESG or a mainstream impact investor is the fact that we have this impact term sheet and we have a carry model. So as you know, VCs always talk about, they have their basic salaries, but there's the carry that they get. So often it's beyond a certain hurdle, so 2 or 3 or sometimes 5 times, and then they get 20% of the extra above that is their carry. Now, for Ananda, we wrote alongside the European Investment Funds the carry model where it's integrated. So we do not see our carry as investors unless we've met certain impact hurdles as well as the financial hurdles. So that's kind of, you get all values aligned with the impact then, and it's not just about the finances.
Hey, Zoe, thanks so much for taking the time to speak with us here. Talk to us a little bit about impact investing and maybe some of the differences with the ESG and how investors can invest in the impact space. Zoe Pedden, VC partner for Ananda Impact Ventures, looking to put some money to work and maybe do some good at the same time as it relates to social impact and environmental impact as well. S&P 500 off 0.3%. We're going to have more Bloomberg Markets up next. Let's get some company news right now with Steve Rappaport.
Paul, the next time you order out, don't be surprised if your meal comes with an Amazon package. The tech giant plans to recruit thousands of small businesses by the end of this year to deliver its packages. According to Axios, Amazon Hub Delivery will start recruiting in nearly 24 states and target at least 20 dense cities across the country. That includes New York, Boston, and Los Angeles. Amazon is said to be interested in partnering with a wide range of businesses, such as florists, coffee shops, and clothing stores. Ryan Reynolds goes full throttle with his latest business venture. Bloomberg's Gina Cervetti reports.
His Maximum Effort Investments and AC Milan owner Redbird Capital are leading a group of investors spending $218 million to take a 24% stake in Renault's Alpine Racing. That's the unit leading Alpine's Formula One activities. Previously, Reynolds and fellow Hollywood actor partner Rob McElhenney took control of the UK soccer club AFC Wrexham.
Thanks, Gina. Elon Musk feels optimistic about the next launch of the SpaceX Starship rocket. The first test flight for Starship in April suffered multiple failures, but in a Twitter conversation with Bloomberg's Ashley Vance, Musk says SpaceX has made well over 1,000 changes to the rocket since then.
I think the probability of this next flight working is, getting to orbit is much higher than the last one. Maybe it's like 60%.
Musk also mentioned his proposed cage match with tech rival Mark Zuckerberg, saying the fight might actually happen. And those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
You're listening to Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, Madison Mills, Paul Sweeney here in the Bloomberg Interactive Broker Studio. A little bit of red, a little bit of green on the tape, led by NASDAQ. It's off about 0.9% here. Yields pretty steady here. 10-year Treasury 3.72%. Looking at the commodity space, WTI crude oil up about 0.8%, still below $70 per barrel. And I'm going to call out Bitcoin. It is about 1% lower, but still holding on to that 30,000 kind of level right there. So we'll keep note of that. Right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news.
Thanks, Paul. President Biden says the U.S. and NATO had no involvement in the short-lived insurrection in Russia by the Wagner Group mercenary force. Today, Wagner mercenary group chief Yevgeny Prigozhin is out with a new audio recording in which he says his group did not plan to overthrow the Russian government. He says he launched the march toward Moscow because he wanted to preserve Wagner as a military group and did not want to come under the command of the defense ministry. The brokered deal that ended the standoff resulted in Prigozhin traveling to Belarus. Well, Bloomberg's Anne-Marie Hordern says many analysts believe even with the deal, the exposed instability is bad for Russian President Vladimir Putin and possibly good for Ukraine.
He is dealing with a lot of internal politics. And what we play over the weekend was chaotic, a spectacle. Russians also lost their lives in what happened over the weekend. So now Putin's attention is going to have to be split. And that is why they think there's potentially this opening for Ukraine.
Again, Bloomberg's Anne-Marie Hordern. While Congress is on a 2-week break during the Independence Day holiday, the Biden administration is hitting the road to highlight its legislative achievements, including a new electric bus initiative. We get more from Bloomberg's Amy Morris.
More than 1,700 buses will be manufactured in the U.S., about half of them zero emission, under a $1.7 billion funding round from the infrastructure law. The move brings the total number of zero emission transit buses funded by the law over 2 years to more than 1,800. That more than doubles the number currently on U.S. roads. President Biden, Vice President Harris, the First Lady, cabinet members, and administration officials have promised a barnstorm across the country to promote the administration's agenda. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Madison.
All right, Nancy Lyons, thank you so much. We appreciate it. Well, you know, Madison, one of the parts of the market I've been really keeping an eye on over the past several years has been private credit. Everybody knows about private equity, but private credit's been attracting a lot of capital, a lot of funds over the last, probably 6, 7, 8 years. And now BlackRock says, I can actually get in on that game.
Yeah, getting in on retail private credit with a fund that's going to start accepting clients at the beginning of July. My big question always with these events when they happen, and Paul, I want your take on this. Once you make something like private credit accessible to retail investors, does that mean that it's already over at that point?
I don't think so. I think, private credit, in my mind, was really good. It really started to really grow after the great financial crisis when some of the banks pulled back on the credit business. And so these, folks said, I'll go to some of these other providers of credit. And some of the funds started raising money and lending out money. And then you could get very competitive returns in a very low interest rate environment. Now as interest rates have risen, they still give you a nice spread because their loans are variable rates, so they're getting paid more. The real question, I think, for just the credit space in general, but certainly on the private credit, and particularly if you want to open it up to retail investors, is, hey, what happens to private credit when we go into a recession?
Yeah.
What's the credit quality of a lot of these funds? And that'll probably be a test for a lot of these funds, and that is a risk out there for some. So in this particular case, is BlackRock bringing private credit to the retail masses maybe at a wrong time when we could be just in front of a recession? That's a concern that's out there.
And with interest rates as high as they are, is this the time to be lending out money that's going to have a higher sticker price?
Yep. So again, it'll come back to the credit quality as it always is, just like it is for a bank, and it'll be for these private credit funds, and we'll see what kind of credit risk managers they were for some of the deals that they struck over the past 4, 5, 6 years, if in fact we do go into recession. All right, right now, Sound On with Joe Matthew starts right now.
go through it all when we talk about the more than $10 trillion global ETF industry right now. We're going to speak in just a moment with Jeff Sherman, Deputy CIO at Double Line Capital, and get his thoughts on credit.
And we're also going to discuss with Jeff the implications of the Federal Reserve's pause and where rates might go from here, Matt.
Also, as we weigh the next moves from central banks, we're going to discuss one Fidelity ETF that can be a one-stop shop for fixed income exposure.
And Matt, as always, Eric Balchunas from Bloomberg Intelligence is with us now. He's taken a look at the flows. Eric, what do you got?
Katie, Matt, thank you very much. So the big takeaway from the flows this week is that move into equity ETFs that we've been loving to watch over the last 5 weeks has stalled out, basically. If you look at that white number under 1 week, that's negative 1.5 billion. That's all ETFs. So basically, flows came in, but they also offset by outflows. That's not good. And equity ETFs saw 2 billion of outflows. SPY is seeing a lot. That's good. But again, it was offset. RSP, that's also the equal weighted ETF, has been having a nice run lately. But again, offset by the things. Also, number 7, TQQQ. You like to see flows there. That's that sort of retail trading crowd buying the dip. Let's look at the outflows over the past week. And here's where you can see a lot of the bad news, right? So the Q's seeing outflows. BBEU is interesting, right? We've seen this whole international trade all year, which I've been skeptical of, and now it is unwinding. JP Morgan is selling out of BBEU and buying into the US. So I think we'll see more of that probably within these flows over the next couple weeks. Now let's take a look at this FOMO drought indicator that we introduced about a month ago, which we think is very important in determining where investors' mindset is, right? This is the gap between flows into equity ETFs versus flows into fixed income ETFs. When it's above, it means more into equity, right? Below, more into fixed income. This would be FOMO drought right here, right? But it's coming back. People are actually getting excited by the returns in stocks. So if you look here, this is all equity ETFs now have taken in more than all fixed income. That's good. We declare the drought over. However, if you break it out to US equity ETFs still well below fixed income ETFs. So I'm probably not willing to call the drought completely over until that equity number passes fixed income. But it's good. It's definitely some good news.
For equity investors or equity investor lovers.
Yes.
Overall
All right.
sentiment, if you will.
Yes, sentiment for the equity market. Thanks, Eric. Joining our conversation now is Jeff Sherman, Deputy CIO at Double Line Capital. And of course, you're not an equity guy. What do you make of the outperformance of fixed income in terms of, in ETF terms? So
yeah, I mean, looking at the chart there, what I see there is essentially what we had the low in yields once again, right? If you look at where that bottom, that chart right there, what I see is that was post the banking crisis that we saw, where we saw a big rally in yields. And so yields have been marching upwards, albeit they've stalled as of late, especially on the back end of the curve on 10s and 30s. But I think some of that is just seeing negative returns in the short term over fixed income. And it is still a FOMO trade as well. But we've seen activity at Double Line. We've seen flows both on the mutual fund and ETF side into our fixed income ETFs as well as our equity ETFs. So in general, I think we're seeing flows across the board as people are reassessing risk profiles. We had a massive run in the Qs, as Eric was pointing out as well. And so you're starting to see some of that kind of people look to allocate elsewhere today.
It feels like all of this comes back to the Fed, that this is still a very macro-driven market across asset classes. And when you think about, equity ETFs maybe starting to overtake the inflows into bond ETFs, a lot of that ties back to this idea that maybe the Fed is finally done, that maybe we saw the last rate hike, even though we've heard to the contrary from Jerome Powell himself. What's the Double Line view on where the Fed goes from here and what that means for risk assets?
Yeah, I think it's very tough to call right now. I mean, we think the Fed should be done at this point in time. Let's continue the pause for at least throughout the summer to let the market digest what's happened thus far. And so the old saying in the market is that the Fed hikes until something breaks. And we did see a break in the system back in March, right? We saw what it did to some of the banking system. And so we haven't really seen the ramifications of all that yet. And so I find it curious to see not only Jay Powell, but the majority of Fed governors who vote for the dot plot say that rates should be at least 50 basis points higher before the end of the year. And so I think some of that, you said a pause in the rate hiking cycle leading to equity flows. I think maybe potentially some investors are thinking that you're going to see negative performance in bonds because rates continue to push up. But at this stage, what we've seen is that Again, 500 basis points is a lot. I think we all agree with that. And I think just the longer that the Fed stays at this level, I think it continues to put pressure on the banking system. It wakes people up to realize they're not getting market rates on their deposits. And look, Janet Yellen will sell you T-bills all day long with a 5 handle on them, right? And she needs to, right? They've been replenishing the TGA as well. But if you look at the back end of the curve, 10-year Treasury is roughly in the range it's been in for the last like 7+ months, right? Since mid-November at least. And so ultimately, as a bond investor, what that means, if you'd have bought this 7 months ago, yields haven't changed. You've had a little bit of volatility, but you've earned carry the whole time. And so I think what people are realizing too, look at how deeply inverted the curve is. Whether you use 2s, 10s, use 3-month T-bills to 10s, we're getting back to these extreme levels again. And so to me, it signals that there's a nervousness with the bond market and that investors are saying that given the macroeconomic data, maybe it makes sense to allocate to some of these longer dated bonds.
Yeah, and so I looked at TOTL, which is your biggest active ETF by far.
Yeah.
And you look in port and you look at a history, it looks like you're going into securitized debt and you're going out of government debt. Could you just explain that trade for us?
Yeah, the majority of that securitized trade, well, there's two legs to it. One is some of the credit exposure on the securitized things like non-agency RMBS, things like CLO, that we think are really high quality at this point in the cycle. Think about it a year ago, Eric, if I had told you that mortgage rates are going from 3% to 7%, I think we all would have forecasted a significant decline in housing. But we've seen inventory, we've seen people just having low rates stay there. But what's happened in the agency mortgage market is that on that side of the trade is that the agency mortgage market has been one where you've lost a natural buyer. Who was this natural buyer? It was these regional and community banks. And so it's put some pressure on spreads. In fact, a month ago or maybe 3 weeks ago, mortgage spreads got to some of their widest levels that we've seen in like 15 years. And this was, again, that high that we saw at that point was because Fannie and Freddie were potentially going out of business, right? And so what you're seeing is there's a very good opportunity from a government guaranteed asset. So you're seeing that we're pairing those two trades together. Yes, we've been selling some of the treasuries because of the cheapness of the agency mortgage market, but we also like some of these other credit sectors because they have shorter duration. They have a relatively shorter spread duration than something like corporate bonds today. And so for the relative value you see there, it is attractive. Lastly on that too, what we've also done within that treasury portfolio is rotate the duration out a little bit to kind of offset that move of having a shorter duration on the mortgage and that credit exposure. So in general, what it is, it's trying to be active. It's thinking about where we are in the cycle and balancing the portfolio risks both on the government guaranteed side as well as the credit side.
I want to get more into that, where we are in the cycle, because there's a Fed paper out now saying the share of non-financial firms in financial distress has reached a level that's higher than during most of the previous tightening episodes since the 70s. So what does that mean for you or that portfolio? Jeff Sherman here with us. We're going to zero in on the corporate credit market next. This is ETF IQ on Bloomberg.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment, cost agreement, on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we
we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg.
Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with a Bitcoin futures ETF. Of course, we've been talking so much about BlackRock's spot Bitcoin ETF filing last week, but interestingly, it's also fueled money to go into BITO. Of course, that is the ProShares Bitcoin Strategy ETF. It's based on futures. It took in $65 billion last week. That is or 65 million rather. That's the biggest inflow in about a year. So BlackRock breathing fresh life even into these Bitcoin futures products. So we'll continue to watch that. But let's turn now to the equity market. Really interesting piece of research out from Athanasios and crew over at Bloomberg Intelligence, basically looking at where money is going in leveraged equity funds. As you can see in that blue line, the short leveraged products have been taking in more money relative to the long bets. So that could be hedging. That could be a sign that maybe the conviction isn't there behind the equity rally. Going to be interesting to see how that plays out. But let's also talk about cash. I'm thinking about Vcash here. This is Vanguard's short cash product. Basically, it's ultra short debt ETF. It's actually one of the biggest losers on the year in terms of outflows. Very rare to see a Vanguard product out there, but really speaks to how that big appetite for cash that we've been tracking for so long, it's starting to fade now, Matt.
All right, very interesting stuff indeed. Katie, let's get back to DoubleLine's Deputy CIO, Jeff Sherman, talking to us about their portfolio and the effects of the tightened monetary policy and really a higher share of non-financial firms failing. How do you look at that? Is a recession imminent?
I don't know if it's imminent, but it definitely seems in the cards over the next 12 months. I mean, if you look at the macroeconomic indicators, pick your favorite one. I can only find two indicators that I follow that are showing still signs of life in the economy. And I see some horrific prints and things like the LEI. What are they? Oh, you want the positive. Okay. So the positive things are ISM services. They're still expanding. Unfortunately, they're expanding at a very slow rate at this point, but that is one of the things, given we're a service-based economy, that's a strong indicator. And it's somewhat contemporaneous, right? It's not massively lagged. And then you have the labor market, which we know is notoriously a lagged variable. And so the labor market seems to be continuing to deliver, at least on the smaller, medium enterprise and some of the service areas. We always see the large cap names are having significant layoffs at this point. So I don't get too excited about labor at this point, just given it's late in the cycle. But you're talking about, some of the stress in the marketplace. I think the biggest place that's seeing this today is a leveraged loan market. And not shockingly, it is a floating rate asset. And so when you think about the buildup of debt, well, all of a sudden, you have 500 basis points more on coupon because they reset off of SOFR, which is key to the Fed funds rate. But if you think about investment-grade corporate bonds or high-yield bonds, well, the bulk of this stuff got refinanced back in 20 and 21. Mm-hmm. So that weighted average cost of capital of these firms is still relatively low, right? So if you don't have a need to come to the market, it's extremely low. And so there's a reason you're seeing this divergence between the lower quality loan names and some of the lower quality high yield is because those actually haven't had to reset yet. But for those that are trafficking in these markets, we prefer a higher quality. Look, I'm okay with some single B risk in the portfolio and double B because, again, some of this stuff ultimately, it doesn't have pressure on it, right? And so this is what happens when you have a rapid hiking cycle and these 500 basis points aren't in all parts of the economy today. We've seen it in housing, right? We see it in loans. And if I'm most concerned about a part of the market that's showing stress, it is the leveraged loan market.
Well, I want to talk specifically about high yield because we've been trying to compare maybe this recession that's coming to past recessions. We heard some really interesting comments from Michael Collins over at PGIM last week. Let's take a listen.
The mistake a lot of folks are making, Lisa, is they're looking at all the historical relationships, right? And they're looking at high yield spreads in a typical recession go out to 800 basis points or 1,000 basis points. And in today's world, that would be a 15% yield, right? Which is kind of Armageddon. They expect high yield defaults to hit 10%. That's because they're looking at the old models, looking at some of the past recessions where you had a lot of leverage, where you had a lot of excesses and credit buildups. You do not have that now. So our mantra is, 600 spread on the high yield market is the new 800, right? If you get into the fives, you're buying high yield.
So 600 basis points is the new 800 basis points, 500 basis points. It sounds like Michael Collins is buying 5 high yield. We're at 430 right now. What's your thinking on basically the valuations in high yield?
Yeah, I think 600 is the buy. I think 800 is more this recession. And I don't think there's a new model out there. At the end of the day, you're pricing default risk, right? But I think it stems back, and I think where Michael could be right here is what we just talked about, right? If the recession happens right now today, if it's imminent right now, these companies don't have to refinance the debt. The maturity wall, as we call it, is extended out at least another year, if not 18 plus months. And so usually it's those maturity walls that cause a default cycle, right? Because the debt has to roll over. And when does it roll over? What does it roll over? It rolls over at market rates, right? So you have these companies right now that are paying a below market rate because, again, they issued the debt 18 months to like 30 months ago. And so ultimately, I think, there's a reason that there's this pressure in spreads, and spreads are tighter than they are usually at this point in the cycle. But again, I think that at the end of the day, if you start to see the recession, you start to see more of this stuff, you're going to get a spread widening. And just look at the last episode of spread widening in high yield. It went on 100 in like 2 weeks, right? And so I don't get excited about 430. 430 to me is not a level to buy. It's a level to resculpt a portfolio and maybe move up in quality a little bit. But look, if he's going to hide out in double Bs in that area, yeah, but they're very tight spreads. You have a 300 handle, right? So ultimately, I think that there is no new mantra in the world today. You've got to look at spreads, and ultimately, the higher that cash stays, the higher yields stay, that people will look at that and say, look, is 8.5 yield or 8.30 yield today, is that enough to really take default risk when I can get these T-bills at 5.5%?
Perfect segue. There is a ETF out there, XCCC, which is all triple C. That is yielding 14%. So, tell me why someone like me shouldn't just put 1 or 2% of my portfolio in this, because look at the spread there. Yeah. Isn't that enough?
Well, 14% yield isn't enough spread, I would say, today. And it depends. I mean, ultimately, triple Cs usually have a 20 handle in a recession, right? And so what does that mean? Repricing, okay, if it's a 3 to 5 year asset, you're talking about being down 20, 25% on that. So your carry helps you some, Eric, but it doesn't get you through it. Secondly, if you look historically, when you talk about triple C, the way that the ratings agencies view that is that it has like an 85% probability of default over the next 5 years. So it's all about trading, Eric. I know you're a good trader. So again, if you want to put on the trade, that's great. But if you like that and you think there's not a default environment, I got a better one for you. I don't know about an ETF on it, but it's the triple C bank loan market. Today it has a 20 handle yield on it. Wow. Right? You know why? No one thinks you're getting 20 over the full cycle of those loans, right? So you're going to have a good lawyer. You're going to have a good workout. But again, if you want to trade it, feel free.
All right, maybe we'll keep an eye out for the double line version of that trade there. But Jeff, really appreciate it. That is Jeff Sherman, Deputy CIO over at DoubleLine. Still ahead on this program, we're going to drill down more into bonds with Greg Friedman. He is head of ETF management and strategy at Fidelity. That's next. This is ETF IQ on Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I'll try and play that role.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
This is Bloomberg ETF IQ. I'm Matt Miller alongside Katie Greifeld.
And Eric Balchunas from Bloomberg Intelligence. He's back with us now. He's back, thank goodness, for today's drill down where he's going to focus on one ETF. Eric, what do you got?
Katie, today we have, we're going to stick with the credit theme, okay? FBND, it's the Fidelity Total Bond ETF. As you can see here, it's actively managed. We also tag it over there. So it's an active bond ETF. The fee on this is 36 basis points. You can't see it, but that's what it says. And that's good because it has helped this fund get $4.1 billion. Most active funds that are priced below 40 bips have sold well over the past couple years, and this one is no exception. So $4.1 billion, this goal of this fund is to beat the Bloomberg Aggregate Bond Index, right? That's a goal of a lot of active bond managers. Let's look at cross-section of the bonds and what you get here. A couple things to point out here. You're gonna get a wide variety of stuff in here, right? It's not just plain vanilla. Your corporate is gonna be about 40%, government 33%, etc. You got some mortgages in there. And then the composite rating, you do get some high yield in here, about 15% B and double B. So you need to know that's a little extra risk in there. And that has actually helped this ETF. If we look at the performance of FBND versus the AG, as well as I threw in two popular active ETFs, it's done very well. I think that little bit of high yield has helped among some other things. And that's good. That helps explain that $4.1 billion, Katie. So if that's, outperformance is key for these active funds. Low cost also helps, and that's why you have such a successful fund here.
Eric, thank you. And joining us now to talk about this ETF, I'm thrilled to say, is Greg Friedman. He is head of ETF management and strategy over at Fidelity, here to talk about FBND, which, as Eric just pointed out, has been handily outperforming, which, as Eric laid out, is the holy grail of a lot of bond managers. When you think about, those that outperformance that you've been able to put on the board, what has been the biggest components if you drill down into the holdings of this fund?
Well, first of all, it's how we approach the fund. It's a team approach. We have three main factors or thematics that we're doing within that. It's multi-sector, it's risk controlled, and a contrarian type of view of how do we choose value. Fidelity's obviously been well known historically for equities, but we have a huge and rich history on fixed income. We have over 400 professionals. We manage $1.7 trillion in assets for fixed income, and this is just one of those products that we've had a great track record, performance, and we've really looked at it, as Eric said, of how do we put in 80% of investment grade plus 20% of more of the high yield that gives it the little extra juice it needs that we able to achieve those performance numbers.
How do you look at, the default rates coming up, a potentially imminent recession? Do you position yourself differently for that?
Not particularly, because it's always been an approach where we say, let's look at sectors. So let's have a global universe that we can invest in, highly integrated in U.S. securities, U.S. governments, securities, et cetera. We do have a portion in non-U.S. equities, but we don't change that strategy. We want to be risk control, which is the second factor I spoke about. How do we get that right balance between risk and return. And then thirdly, on a contrarian, there's value out there. How do we find that value? So we're not taking the active bets based upon, what you just described. It's really a methodology that we stick to.
And how does that work inside Fidelity? Most people know Fidelity as the active mutual fund company. I remember when Bill Gross and PIMCO launched Bond, they said this is kind of like the best ideas of the total return fund. How does this relate to the broader active bond mutual funds at Fidelity?
We have a mutual fund with the same total bond strategy, same portfolio manager, same team approach. So we're managing this in the same manner that we manage the mutual fund in today. So it's very consistent with our standards, our policies, and our procedures.
And I do want to get your thoughts on the active non-transparent wrapper. Of course, that unlike traditional ETFs, you really only see the holdings once a quarter, similar to a mutual fund. It's been interesting. This was billed as the next big thing for ETFs. So we really haven't seen the asset gathering. What's your current thinking on whether, maybe this kind of missed the mark, this wrapper, or is this something that could actually take off?
We still think it has a lot of legs and a lot of applications. The challenge is we're limited to what we can put into this wrapper. So because of the exemptive relief we received from the SEC, we can only do U.S. equities. So that eliminates fixed income, theme of our show today. It eliminates non-U.S. equity, options, futures, and derivatives. So all the applications or all the technologies have worked very well. We've seen great spreads, great depth, great quotes. But because you're only limited to U.S. equity, some of the applications are limited. So a lot of the firms, I think, have bypassed the semi-transparent technology and gone right to fully transparent. We still think there's a lot of places where semi-transparent makes sense, with liquidity concerns, certain market spaces, certain different asset classes. It makes sense, but we're not there yet because we haven't gotten the needed approvals from the SEC.
Greg, great to have you on the program. Thanks so much for joining us. Greg Friedman of Fidelity talking to us about FB&D as well as ants. Thank you very much for that. A quick programming note, markets are closing early next Monday because of the 4th of July holiday, so we'll be back next Wednesday, July 5th. This is Bloomberg.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs.
door was open for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Do you think there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is Deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Welcome to Bloomberg Markets. I'm John Ehrlichman.
And I'm Matt Miller. Let's get a quick check on the markets at this hour. We are seeing a little bit of a drop in stocks right now. Not much, really. Just a little bit of a fade to the rally that we've been watching, down about 0.1% right now at 43.44. You do see investors buying bonds, looking maybe for a little bit of safety in government debt. So we do see the yield coming down. But again, it's only marginal, still looking at 4.73, and this is the 2-year yield, remember, so we see this a similar action on the longer end of the curve. The Bloomberg U.S. Dollar Index down about 0.1% at 12.30, so not a lot of action there. And in oil, we see WTI still holding below $70 a barrel. John, I would say there's a lot of geopolitical news right now, and it looks like market participants, to some extent, are trying to wait it out and see, which end is up.
Watching the headlines for now, moving some money into energy stocks, Matt. And then we've got some specific corporate stories that we are tracking. Carnival out with quarterly results. Now, the stock drop looks dramatic. We're down 10%. But remember, this particular stock, a lot of the cruise operators have been red hot recently. And so the fact that the profit picture in the current quarter fell short of expectations played a role here. Pfizer under some pressure throughout the trading day as they have dropped this planned obesity drug on some safety concerns. We'll continue to monitor the headlines on that. It is a deal Monday, a merger Monday, if you want to say it that way, Matt, in the sense that IBM is back at it again with a major software acquisition. It's actually the 7th deal we have seen from Big Blue so far this year. Investors like the news. Shares up about 1% right now. And investors in PacWest are also applauding the company for selling more of its loan portfolio. Obviously, that gets back to the balance sheet priorities that we've seen from regional players after the banking turmoil over the last few months.
All right, investors still digesting, though, really the top story today, and that is geopolitical fallout from the turmoil within Russia. Wagner Group chief Yevgeny Prigozhin said earlier that he has no plans to overthrow the Russian government, or had no plans to do that when his army was marching toward Moscow on Saturday. He said it was more of a protest. Here's how prominent guests on Bloomberg Television are interpreting the developments.
I think it would have been even more unstable under Prigozhin, definitely. But this is a clear case where the enemy of our enemy is our enemy. I don't think there was anyone in NATO that was rooting for Prigozhin to take over in Moscow this weekend.
The idea that Mr. Prigozhin is disappearing off to Belarus for a quiet and comfortable retirement growing vegetables is frankly incredible. So we will have to see over time what emerges as the structure of the deal that's obviously being done.
Lukashenko is not a peacemaker. He now presented as mediator in this issue, but he was rather Putin's messenger. Lukashenko passed the message to Prigozhin, which allowed Prigozhin to stop the march and save face.
And for more on this, let's bring in Angela Stent, senior fellow at the Brookings Institution and author of Putin's World, Russia Against the West and With the Rest. Great to have you with us, Angela. You heard some of those reactions. I'll start with your own. How have you been assessing this situation?
Well, first of all, I think this is the first act of a drama that's still playing out. There's a lot that we don't know about what really happened, and a lot of it doesn't really compute. When you had Putin in the morning on Saturday threatening to have Prigozhin and others arrested because they were traitors, and then by the evening he signs a deal, an agreement to go to Belarus, everyone stands down and he's not going to be prosecuted. So I think what you've seen is a real challenge to what was going on in the Kremlin. Even though Prigozhin didn't challenge Putin directly, he certainly challenged the whole Ministry of Defense, and his demand was to have both the defense minister and the chief of the general staff removed. So far that has not happened, and they're circulating video today of the defense minister Shoigu. Let's see whether it's really from today. So there's clearly a lot of turmoil going on there. I agree that Mr. Lukashenko, that Mr. Prigozhin is not going to cultivate his garden in Belarus. I just read the message that he put out. We don't really know whether he's in Belarus, but he could also use this as a staging point to have more military incursions into Ukraine. I mean, before this happened, the Ministry of Defense wanted to disband the Wagner Group, but I don't think that's going to happen anytime soon.
So has he essentially just won his stay, or won the stay of the Wagner Group with this march and deal, Angela? Do we expect it to be, you know, business as usual from now on for these mercenaries in Ukraine?
That I'm not sure about. I think you have to remember that Wagner is also a very important arm of the Russian state in places like Africa, in the developing world. They have lots of assets. They have a troop presence particularly in Africa, in Libya, in Syria and other places. So they're not going to go away. I don't know. We may not see Wagner soldiers going back into Ukraine. The Russian MOD is trying to get them to sign on with the regular army, but Wagner certainly isn't finished.
You know, how big is this group? I keep seeing references to the 50,000 number, which is a nice round number, but it doesn't make sense that with only 50,000 people, he could hold troops in so many African countries, you know, billion-dollar assets there, be active in Ukraine, and march up in a mutiny towards Moscow. It seems like it would have to be more people.
Yeah, I mean, I don't think anybody knows because those things aren't public. First of all, they said on Saturday that there were 25,000 Wagner troops just marching with him from Rostov in the west of Russia to Moscow, but then it turns out there were only 8,000 of them. So we really don't know how many troops he has, but I would agree with you that 50,000 would be a rather low number for all of the activities that they're doing around the world.
Angela, the profiles of Prigozhin, we've seen so many since the situation unfolded in Ukraine. But before that, generally speaking, this is someone who arguably kept a lower profile, at least on the world stage. Now, with everybody constantly talking about this, do we even know where he is? Are we going to be able to track his whereabouts through all this?
Yeah, so we don't know where he is. Maybe he's in Belarus, and he did, or his people did issue this message a few hours ago. But he could be anywhere. And I think we're assuming now that if, let's say, he goes to Belarus and he carries on activities there, I think we also have to watch whether he's in fact there on this earth within the next couple of weeks. Maybe something will happen to him. There's a lot that we don't know. It's very unclear.
And ultimately, what does this mean for Ukraine, in your opinion?
So, some people are saying, well, this is an opportunity for the Ukrainians to gain more ground there. I don't quite see that. I mean, the Ukrainian counteroffensive is going on. It's a hard grind, a hard slog. They're losing a lot of people. They're gaining territory incrementally. The Russian defenses are very strong. I think what it probably will do is for the Western countries, for Ukraine's allies, to realize that, we have to do everything we can to help the Ukrainians win. and embed them in security structures with other Western countries. We have a NATO summit coming up next month in Vilnius. Ukraine isn't going to get admission to NATO then, but at least there have to be maybe some more concrete offers made to Ukraine. So I think it's really shaken up the resolve of the allies of Ukraine to do more for it.
To put it bluntly, Angela, is Putin going to kill Prigozhin now? And if he doesn't, does this risk others, encouraging others to challenge his rule?
I mean, it's true. He challenged Putin, or he challenged the Kremlin, and so far he got away with it. So I think I think we have to watch this space very carefully. On the other hand, he and Putin go back a very long way, and have worked together quite closely. So I would just say watch the space.
All right, Angela, thanks so much for joining us. Brookings Institution's Angela Stent talking to us about the mutiny from the Wagner Group in Russia. Coming up, Aston Martin teams up with Lucid to help electrify its fleet. Details next. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Could face bigger challenges next.
It was going to keep rate World Cup. This is a 3.
As the economic picture down.
The OK is getting ready to make a decision.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Markets. I'm John Ehrlichman with Matt Miller. Time now for our stock of the hour, and we're watching both Aston Martin and Lucid, the two companies teaming up on EV technology. The news sending the shares higher today. The gains on the day overall have been trimmed, but Aston Martin saying it's going to pay more than $230 million in cash in stock to Lucid in exchange for battery electric powertrain components. It is worth noting that Saudi Arabia's sovereign wealth fund is a big shareholder in both of these companies. Let's bring in Bloomberg Technology co-host Ed Ludlow, who's been tracking this story as well. And Ed, for an industry that is going through some big change, you have some, relatively speaking, smaller players that are coming together, it seems.
Yeah, I mean, a lot of the street pointing to this being quite logical. They're both relatively under duress financially, but, you know, Aston Martin has a tradition, which Matt's about to tell me about, of relying on third parties. The DBX, DB12, both use a Mercedes engine, and Mercedes has a financial interest in Aston Martin as well. And it's really interesting because it goes back to the origins of Lucid. I've covered this company for a long time, founded in 2007 under the name Ativa. You know, its original goal was to be a maker of powertrain and battery pack rather than a full luxury EV maker. It later pivoted, but that's their point of differentiation, right? Lucid feels it has superior technology when it comes to the energy density situation for battery packs, and they want to be a supplier of that at the high end of the market.
So this is interesting. I would read it as a consolidation if PIF owned more of Aston Martin. I think they have like a 20% share max, and they own the majority of Lucid. How do you see this going for the British car maker? Because essentially, Lucid is now a Saudi entity.
So, taking Aston Martin look under at face value, I mean, they're going to pay Lucid $10 million to work out how to get the Lucid powertrain into Aston Martin design, right? And the spokesperson for Aston Martin explained it to Bloomberg pretty simply. The Lucid technology is available right now. Aston Martin has a goal to have its first battery electric model on the roads 2025 and then electrify all models the following year, 2026. They're going with Lucid because they can get their hands on it. Mercedes is not yet available, its electric drivetrain platform. So, you know, the consolidation question's interesting. The other question I would pose to you, given the public investment fund relationship, is we know that Lucid is going to build a factory in Saudi Arabia. Do we see Aston Martin manufacture vehicles in Saudi Arabia in the future? That is a question that is unanswered.
Unlikely. It's unlikely, right?
Well,
right.
So I guess, Ed, now that even though the dots connect on these two having some kind of arrangement, the fact that you have an announcement like this after we already saw legacy players like Ford and GM teaming up with Tesla, for example, on the charging network, is the door now open for older and newer players to team up or find some common ground?
It's interesting because Peter Rawlinson, the CEO of Lucid, has been speaking about the potential to sell the powertrain as a product to other OEMs for some time. The thing is, like, Lucid doesn't really have its own house in order. Remember, they planned to build 20,000 EVs in 2022. They built around 7,000 in the end and only delivered 4,000 to customers. This year, they were going to build up to 14,000 EVs. Now they're guiding to the low end of that range. So, you know, they're kind of trying to do two things at once: scale their own footprint here in the United States at the facility in Arizona, but also be a supplier of technology to what is a high-end partner. And that's the disconnect, John. Lucid has always positioned itself as having superior technology, but what it does not have is scale, hence the very high price point for their own vehicles.
Right.
So them being able to expand into kind of the more mainstream market with other players, it's a really good question.
But they now have a choice, right, Ed? Because if the Saudis own 62% of Lucid, they essentially have something more than a sugar daddy, whereas Aston Martin continues to fight for its life.
Yeah, it continues to fight for its life. And I think what's interesting, there was some reporting in the story actually about Mercedes, but Aston Martin will continue to get components from Mercedes, but instead of doing it on equity, they're just going to pay in cash. Because remember, you know, Mercedes, I think that the Lucid stake is 3.7% in Aston Martin Lagonda. Mercedes has a financial interest in it as well. And the cap table, right, the cap table on that business is very interesting.
Yeah.
You know, remember they also had to go to Geely following Lawrence Stroll's 2000, what year was it? Following his bailout, 2020, I believe, right?
Yeah,
that Geely also has an interest as well. So it's very complicated, but I think everyone just wants to see electric Astons on the road. That's what matters.
That's right. Well, we just want to see Aston Martins. I mean, who isn't excited when you see an Aston Martin drive by? Just very cool. Ed, thanks so much for joining us. Bloomberg Technology co-host Ed Ludlow. You can catch him every day from noon to 1 New York time. Coming up, corporate default rates are extremely low right now, but our next guest says they will nearly double by March. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Markets. I'm John Ehrlichman with Matt Miller. Some interesting data points, Matt. In March, the U.S. trailing 12-month speculative grade corporate default rate was 2.5%. Now the S&P believes that could reach 4.25% by next March. Nick Kramer is with S&P Global, serving as head of ratings performance analytics. Also joining us for the conversation, Bloomberg's Katie Greifeld. Nick, nice to have you with us. I guess the key word is could here. What are the determining factors on what happens from here?
Thanks for having me, guys. Yeah, it's we're in a period now, like you say, where defaults have been very low. We've been in a really sub 2% default rate period for an extended period after COVID. We got to about 6.5% at the peak there at the end of 2020. But all of those liquidity infusions, the market reaction, the surge in issuance that we saw in 2021 really helped out to keep the default rate fairly low. But now we're seeing the effect of this rising interest rate cycle start to really pick up, and the composition of the debt is more loans now that are more sensitive in the near term. And so as this pressure rises and we think it's going to be higher for longer, it's just going to start to wear away, with cash flow, a slowdown that we expect in the economy coming forward as well.
I mean, I guess the question is when, right? We were just talking with Jeff Sherman, who is the deputy CIO at DoubleLine, and he was saying in leveraged loans, yeah, this is going to be a problem because those are floating rate loans. Whereas in, corporate IG and high yield public debt, most of those companies already refinanced at closer to zero and are good, in his view, for the next 12 to 18 months. So what is your view on it?
Oh, I have to agree with that. We have semi-annual refinancing studies, and we're not showing a lot on the fixed rate side, especially even at B- and lower. That's coming due in really the next 18 months or so. I think it's probably in the U.S. Around 20 billion or so. That's again at these weakest levels. And so, there's going to be some sticker shock there, we think, if rates stay higher. But for the time being, they're still enjoying those fixed low rates, like you say, that were a lot of it taken out when rates were at their all-time lows.
And Nick, because that maturity wall maybe isn't as scary as it sounds this time around, when you think about that forecast that high yield defaults could reach 4.25% by March 2024, historically speaking, that's not very high. That's somewhat pedestrian. How do, the fact that a lot of these companies have refinanced, that this maturity wall maybe isn't as dire, how does that factor in?
It's, again, more looking towards the loan side. Now, you can contrast that 20 billion with closer to 550 billion or more. That's outstanding in floating rate debt that is constantly kind of being worn away, the slow burn, if you will, of higher rates. And that's where a lot of the weaker credits are. We've seen a big surge in new issuers from the loan market in the last, I want to say, 5 to 7 years. Again, taking out terms and conditions which are very favorable, almost no covenants during that period, very low rates, the floors were low, and all of that has changed in the last 12 months. And we're already seeing roughly about a 10%, maybe closer to 10 or 12% increase in the cash interest costs on a year-over-year basis for our corporates in the U.S., and it's even higher in some other regions.
So how much does the Fed raising rates affect your base case, Nick? I mean, the dot plot, as we all know, suggests that they're going to raise 2 more times. It seemed after the meeting that nobody believed they would raise at all, and now WIRP is pricing in 1 increase, but then a cut shortly thereafter. What's your base case?
Yeah, ours is, we're looking for 1 more as well, so a little bit less than maybe what the Fed is communicating. But, it's kind of a little bit more about the speed and the slope at this point that we've been thinking about. And when you think about it that way, the trajectory is far more, at least, placid if you ignore the absolute level. So that pace of increases is calming down. You're seeing primary markets respond with more issuance so far this year. I think it's just easier to find a price on a deal. I think we saw treasuries increasing by about 6 basis points every 5 business days last year at the peak of it. Right now, it's a lot of it's been about that stability in rates that we think is helping to calm things down a little bit more in a relative sense.
All right, Nick, thanks so much for joining us. S&P's Nick Kramer joining us, as well as Bloomberg's Katie Greifeld. Thank you to both of you. For John Ehrlichman, I'm Matt Miller. As we watch markets drop just about a 0.25% here in New York on the S&P, John, we're all awaiting further details, I guess, in the Wagner-Russia case.
It's certainly something we're going to watch. You mentioned the energy price as well, which we'll be watching as well. Energy stocks up for now, Matt, but we'll see how things play out. This is Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, only on Bloomberg TV and radio.
It's a new week, but the sentiment, still the same old song. Live from Studio 2 here at Bloomberg World Headquarters in New York, Romain Bostic kicking you off to the close. You take a look at U.S. Treasuries extending gains for a second day. That's led by the belly of the curve this time. Meanwhile, stocks soft for a second day here in the U.S., dragged down by travel companies, big tech, and financials. Financials as a group right now poised for their longest losing streak since October. Goldman Sachs down for a sixth straight day. Now remember, the S&P, which 3 weeks ago entered a technical bull market, has been pinned in a tight range ever since. 4,300 on the lower bound, roughly 4,400 and change on the upper. The main point of resistance on this day, 43.58. Elsewhere, you do see some modest turnover in the dollar, modest gains for gold, and meaningful flips for crude oil, from gains to losses and back to gains again after the weekend drama over there in Russia. But we start the show off here with the slew of deal activity on this Monday. IBM pushing deeper into the hybrid cloud and AI business, a $4.6 billion acquisition of software company Aptio. United Health agreeing to pay $3.3 billion for home health care company Amedisys, and warehouse REIT Prologis set to gain 14 million square feet of industrial properties from funds affiliated with Blackstone. Throw in a Saudi-backed EV supply pact between Aston Martin Lucid, a $3.5 billion sale by PacWest, and a stake in Renault's Alpine Formula One team taken by Hollywood actor Ryan Reynolds in Redbird Capital. Also on the deal front, SL Green, brokering the sale to Japan's Mori Trust of an almost 50% stake in an office tower over at 245 Park Avenue in New York, just down the street from us. It's a trophy skyscraper along a trophy block that at a gross asset value of $2 billion signals that, yeah, Virginia, there is still investor interest in office real estate. That's putting the bid under other office REITs, including Vornado, Hudson Pacific, and Boston Properties. Boston Properties actually your biggest percent gainer in the S&P 500 today. The macro conditions and interest rates, of course, are still in focus. Katie Greifeld joining us right now to take a look at some of the interesting price action, Katie, that we've been seeing in short-term rates market that, to me at least, suggests that quite a few traders are starting to reposition allocations and hedges.
Yeah, joining from the other side of the board, let's take a look at money market funds, because we've been tracking this all year, this real bid for cash that we've seen going into money market funds, topping close to $5.5 trillion according to ICI data. But you are starting to see a little bit of a trend shift. For the last 2 weeks, of course, we've seen outflows from money market funds after a real steady climb that really accelerated in March with all of the drama that we saw in the financial sector. Of course, you can barely see it on that chart, but speaks to basically this rebound that we've seen in the equity markets that reignited risk appetite. But all the while, you still have some investment managers betting that there's still going to be demand for cash. And of course, PIMCO is among them. It was really interesting. Last week, we got some ETF launches from PIMCO, including a new ETF called the PIMCO Ultra Short Government Active ETF. The ticker there is BILZ, bills with a Z. It's going to track short-term debt in the government space. They have a very successful ETF under the ticker MINT, which tracks short-term treasuries and corporates. That has about $9.2 billion in assets. And just taking a look at this launch, Ramin, looks like they're trying to capture some of that magic.
All right, well, let's speak to one of the people behind that. Jerome Shiner joining us right now. He's PIMCO's head of short-term portfolio management and funding. Interesting plug there from one Katie Greifeld of Bills. Let's actually start there, Jerome. What is the appetite right now in the shortest of short-term right now?
Well, we see and have been encouraging clients to be defensive. I think one of the most underappreciated aspects of the market right now is the value of optionality in portfolios. And really, when we look at the horizon, we see it ripe for a period of aftershocks. It means increased volatility, and we saw that initially earlier this month with regard to the debt ceiling. We see it ongoing with regard to corporate profitability, and even furthermore with regard to the evolution of monetary policy. And when you put these things together, what it really says is that the purpose of having some balance in portfolios, some generation of income, even at these higher risk-free rates, actually is a worthwhile cause. And so one of the reasons that we were looking to establish a foothold in the front end of the government money markets was utilizing the ETF space to do this. We saw increased demand from not only retail investors, but institutional investors as well. And so for the horizon, where we see the period of aftershocks, we think it's a ripe opportunity to create some balance in portfolios that might not necessarily be ripe for additional risk-taking, but also, more importantly, create value when there are opportunities to reposition and do so while not giving up liquidity within the portfolio. And that's really an attractive trade-off right now.
Well, let's talk a little bit more about liquidity. I was having this conversation this morning with an equity fund manager who was talking about the need to remain exposed to equities, at the same time reducing risk. And she was kind of framing around this idea of picking an allocation that provides that degree of liquidity should you-know-what hit the fan and they do need to move or reallocate down the road.
Yeah, I think there's two aspects of this. There's one of thinking about being defensive in terms of your risk allocations, and we're doing that at PIMCO by being up in quality, favoring